morning, students. Good morning, everyone. There are very few students joined today. Okay. Remember what we were discussing in the last class? Anyone? What are we discussing in the last class? What standard we started? What did we discuss?
AS2, ma'am, and
Okay.
AS10.
AS2. We finished AS2, right? And we started AS10, which is PPE. What did we learn in PPE?
Property, plant, and equipment. And
Yes.
plant are included in that, except the biological acids.
All plants are included except biological acids, is what you're saying, right?
Yes, ma'am. But bearer plant you told in last lecture.
Okay. So bearer plant is included or excluded?
Included, ma'am.
Okay. All bearer plants are excluded except the bearer plant. Okay.
Because more than 12 months.
Okay. And what is the definition of PP? Anyone? The definition of PP has two conditions to be satisfied. What are the two conditions?
It should have probable economic benefit, a flow into the business, and its cost should be measurable.
Okay. Did I ask recognition or definition? I think I asked definition. No, it's recognition criteria. What you told is.
Okay. The condition
but I asked
is
definition.
Yes, ma'am. The condition is it is should be used for the production or supply of goods in the business, and
Yes.
it should be either it should be given for the rent, or it should be used in the administration. That is the first condition, and the next condition is it should be used for more than 12 months.
Okay, very good. This is the definition, and what you told in the beginning is the recognition criteria of the PPE. Correct. Okay. And what else did we discuss?
Ma'am, we discuss in detail as animals, especially in told before the lecture.
And cost also we discussed, ma'am. Cost
Okay.
of item that we should consider, we should take.
I think we ended with that. I think
Yes,
cost was something that we stopped in between. Inclusions, I think I discussed.
Yes.
What are inclusions?
Inclusion, we will consider the purchase price, and then anything which is directly related to the purchase.
Directly attributable cost, we can say.
Yes,
right?
Directly attributable cost, and decommissioning.
Decommissioning, restoration, and the other kind of.
Also, we will include in the cost.
Okay. And exclusions?
Exclusion, when we do for a new facility cost, that will not be included. That's
okay.
Administration we will not include. Admin expenses we will not include, and anything which is we introduce newly to the business could be a new department, new costs and productions, or new product also.
Okay. So this was what we started the last class, PPE, right? The objectives of PPE. Then we saw the principal issues of accounting for PPE. Why are we doing this standard? It is because we need to know the recognition. We need to know how much depreciation should be charged, what should be the carrying amounts, impairment clause, if any, how they have to be recognized. That was the main issue why we had to have a standard for PPE. Then we moved to the scope of the standard, wherein we saw that it is not applicable to biological assets, and then bearer plants are included in it. Bearer plants is like an exception, which means bearer plants will be covered under this PPE standard. And these wasting assets are also excluded from this standard. Mostly these are excluded because we cannot. Because these are depleting resources, we cannot, and biological assets are something which needs a biological transformation. They have to be recorded at fair value. So we can't use this or apply this standard. So these two are excluded from PPE standard. Then when we came to definition of PPE, we understood what is a PPE, right? PPE means it has to satisfy two conditions. Definition, two conditions. Recognition, again, two conditions. In definition, it should be used in production or supply. It should either be given as rental or administrative purpose. You either use it in your business, give it on rent, or use it for running the business. Anything is fine. But if you're using it for more than 12 months, then both the conditions are satisfied. Then it is called a PPE. If it is called a PPE, it is not enough. You also have to check if it is meeting the recognition criteria. If it is meeting the recognition criteria, then you can record in your books of accounts, right? So with that, I think we had definitions, other definitions also. What is a living animal? What is a plant? Bearer plant and all those. Bearer plant definition we saw. And we saw a few examples also. The wine, grapevines, all these things which take more than 12 months are basically called as these bearer plants, right? Then we saw the recognition criteria, wherein first criteria is it should have probable future economic benefits flowing into the organization. And the second condition is it should be measured reliably, which means you need to know what is the cost. If you cannot measure the cost, you can't recognize it in your books of accounts. That's the other condition. Then I told you how to measure PPE. When you're initially recognizing it, the initial recognition will be at cost. But after your initial recognition, which means subsequently from second year, if you want, you can change. You can change to revaluation model. We didn't discuss how this model will work, but I just told you that after recognition, subsequently you can change your model. But how to change, how to record it, we will see later, don't worry. But for now, we were seeing what were included in cost. I think that is what we started. What will be included in the initial recognition cost. In cost, we will have the purchase price. Anything directly attributable cost also will be added. Also, additionally, this decommissioning and restoration cost also will be added. In purchase price, same like how we saw AS2, right? Purchase price, if you have purchased a product, the purchase price, duties and taxes, irrecoverable duties and taxes, and freight charges have to be included. Any other directly attributable cost to bring that asset to your location for usage. All such costs have to be included. And why are we including this decommissioning and restoration charges? Sometimes it is with a condition, and assets will be purchased or assets will be taken with a condition that you will have to restore back the place, or you have to restore back the asset into the same position how you have taken it when you have purchased. So when such conditions are included, we are expecting that some cost will be included after 10 years or 20 years. That cost also will be added now itself to the asset, so that you keep depreciating it, and by the end of that 10 years or 20 years, you are having some amount with you which you can use for that restoration purpose. So that's like thinking about future and doing it right now. So these are some inclusions that we had. And when we came to exclusions, I think I just told exclusions, but I told I'll discuss exclusions again. So if you look at these exclusions, basically when you're looking at the exclusions, you will have to think in your mind whether it will give you any. One main point you have to think is whether it will give you any additional future economic benefits, right? This is one point you have to look at. If you're doing this, is it going to increase my future economic benefits or not? That's one thing you have to see. Or you will have to see, is this an operational cost? Right? This is also one more thing you will have to look at when you're looking at exclusions. Now, when you talk about the first one, the opening of a new facility of business, when you're opening a new facility, if you are buying a furniture, if you're buying a furniture, cost of this furniture will be PPE. Agreed, everyone?
Yes,
Morning.
ma'am.
Are you all there?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
Morning. Sleeping. Just keep responding, otherwise I will feel you all are lost. Okay? Is if you purchase a furniture, example, if you're purchasing a furniture, is it a PP?
Yes, ma'am.
Yes. Now, if you are having an inauguration cost, example is, I mean, when you're opening a new facility, there will be few operational costs or there will be few costs, right? Not like purchasing a PPE or not like purchasing some kind of an asset. Other cost, operational kind of cost, those cannot be added to the cost of your PPE. That is what the standard want to convey. No, it is not like when you start a new facility, that asset also will not be included. You can't say that. Any kind of cost which are like operational or which don't require. Now, what is our other condition? If you remember, any cost which is required to bring to your location or usage. We discussed this point, location or usage. So if you are requiring that cost to be incurred to bring it to your location or for your usage, then that is a mandatory cost which have to be added. We all know that, right? So that is also one more thing you will have to look into. Now, this inauguration cost is not needed for you to use the asset. For using this furniture, inauguration cost is like not needed, right? So this will be excluded. Same goes here also. If you are launching a product, the advertisement or promotional activities, these will be like kind of an operational activities rather than the cost that can be added to the asset. Or we can say these are like the marketing costs, we can say, or indirect cost which cannot be added to the cost of the asset. Same goes here also, the staff training cost and all these. Now, when you're conducting a business in new location, here what happens? It's like mostly like a relocation or something like that, right? So if are you having some additional economic benefits out of it? Is it an operational cost? Is this cost required for you to bring to your location? All such things, if you just look at, then you will know if seriously this is the cost that have to be added to the cost of the asset or it should be excluded. And administration, so it is like mandatory. Anyway, administration and general overhead costs are not included in your cost of the asset. It is because these are general. We can't specify that this cost is for furniture, this cost is for building, this cost is for land. Such segregation cannot be done. These are in general for all the assets or all the products. So it is difficult to segregate. So we don't add it to the cost of the asset, it is excluded. So these are exclusions. I'll take up a few questions.
Third one,
Yes.
cost of conducting business in a new location with a new class of customer, including cost of staff or training, ma'am.
Mm.
Ma'am, meaning, please explain again.
If you're conducting, I mean, if you're trying to relocate to a new location, I want to, there is a huge, we can say there is a prime customer who wants to move our business to a new location because he is giving a, good amount of business. I want to move to a new location. Okay. Now, if I have to move to a new location or if I am moving to a separate building, I wanted few of our staff also to be trained. This training cost is not included. That is what they want to convey. It is not like suppose you have bought some asset there. That asset is PPE, but any other kind of operational cost should not be added. That is what it means. Right?
Okay.
Moving to a new location. If you're moving, sometimes we do that, no, because of the customer, or you want to, also grab new kind of customers. You keep moving to different location. You expand your business, no. So when you're doing such kind of things, should all these operational kind of costs be added to the cost of the asset or not is the question. Excluded. All these are excluded.
Okay,
We'll do a
ma'am.
problem. We'll do. Okay, look at this illustration 1. Illustration 1. Can you see my question
Yes,
I'm
ma'am.
displaying? Okay.
Yes, ma'am.
Yes. Read this question.
Entity A, a supermarket chain, is renovating one of its major store. The store will, ma'am, this part is not available.
Is
Side.
not. I mean, you can't read it?
Yes, ma'am, it is cut from
Okay,
side.
now is it visible?
Okay, ma'am. The store will have more available space for in-store promotion outlet after the renovation and will include a restaurant. Management is preparing the budget for the year after the store reopens, which include the cost of remodeling and expectation of a 15% increase in sale resulting from the store renovation, which will attract new customers. State whether the remodeling cost will be capitalized or not.
Here, this is about recognition criteria. This is about recognition criteria, right? They're asking you whether you have to recognize this as a asset or not. You have to capitalize it or not, right? For recognition, we have two conditions. One, it should have future economic benefits. The other one, it should be measured reliably. Both these conditions have to be satisfied. Only then we can say that this can be capitalized, right? Now, what is the first condition? Future economic benefits. Do you think there will be any future economic benefits because of doing this remodeling to a supermarket? Yes or no?
Yes, ma'am.
It is clearly given in the question that we are going to have an expectation of 15% increase in the sales because of this remodeling. So do you think, is it a future economic benefit?
Yes, ma'am.
Yes, ma'am.
Yes.
Yes, ma'am.
So the first condition is satisfied. What is the second condition? You should be able to measure it reliably. Can we measure it reliably? They told the cost of remodeling and all these things. I mean, they clearly told they have prepared a budget for the year, so which means amounts are known to them, right? The renovation will have this much cost, so that cost can be determined. It's not like you know it is coming from somewhere that I can't even tell them what is the cost of remodeling. Like I have a clear budget also for it, which means both the conditions are satisfied. Can you capitalize this as an PPE? Yes or no?
Yes, ma'am.
Yes, ma'am.
Yes. Is it clear? So how to check for the conditions when you are checking for the recognition criteria? Two conditions: future economic benefits and can we measure the cost. These two are satisfied. You can record it in your books of accounts. This is for the recognition. And I think we were seeing the initial recognition part with inclusions and exclusions. Now look at this question, illustration 2. Read this, illustration 2.
Entity A has an existing freehold factory property which it tends to knock down and redevelop. During the redevelopment period, the company will move its production facility to another temporary site. The following incremental cost will be incurred. Setup cost of rupees 5 lakh to install machinery in the new location. Rent of rupees 15 lakh.
Okay. So there's still we have a question. Yeah. Finish this also.
Removal cost of rupees 3 lakh to transport the machinery from the old location to the temporary location. Can these costs be capitalized into the cost of the new building?
That is what is the question. They're asking if this can be capitalized into the cost of a new building. Now we will have to look here. Is this incremental cost giving you any incremental future economic benefits? This is one thing you have to check. Future economic benefits because of incurring this kind of an incremental cost. Did they mention that doing this redevelopment is going to increase the future economic benefits to you? Is it mentioned anywhere?
No, ma'am, it's not mentioned.
It is not mentioned, right? They're just knocking down the existing asset and then redeveloping it and then moving it to a temporary site because they have to redevelop. A few facilities have moved to a temporary site. For moving it to the temporary site, they have incurred few operational costs like setup costs and rent because they have moved to a new location or new site, temporary site. They have to pay a rent and they also have some removal cost, transportation, and all these things. But they did not clearly mention that this is going to give us any incremental future economic benefits, right? And it is not needed also. Now, this cost, is it needed for you to bring that asset to the usage and all those things? It is not. It is not needed. So this cannot be capitalized. This asset cannot be capitalized to a new building, right? So this is like mostly like a reorganization of your business or relocating your business, which is not going to give you future. If it was mentioned about future economic benefits and all, then we must have considered other conditions also. But since we don't have any incremental future economic benefits, no, we can't capitalize it, right?
Ma'am, this is Lohit here. Good morning.
Yeah.
I just have a doubt regarding the same question. I understood the answer regarding the future economic benefit, but I had a doubt. If they had given one more extra line saying the plant would take, like say, 3 years to be built, and all the costs that are incurring over here will be used for 3 years or is going for more than 12 months. Will
So
it affect?
all these costs, do you mean to say all these costs are?
We will bear this cost for 3 years. So
Acha,
whatever.
okay.
So will it change the answer without any additional info about it increasing our revenue or anything?
If there are no future economic benefits, is what you're asking?
No, no future economic benefits ka line is given. Like they are not specifying that we'll increase or something like that.
But
But
still,
they
you can't know when there are no future economic benefits. Capitalizing it as a PP is the first condition is that it has to have some incremental benefit. Yes or no? If you are incurring that cost for 3 years, also it will mostly become like an operational cost only for you. Rather than having it like a cost which can be capitalized, it will mostly become an operational cost. You are just incurring in 3 years, but then since you are incurring for more than 12 months, you can't randomly say it will be a PPE. Other conditions also have to be satisfied, right? Only the definition says it should be for more than 12 months, but we will have to also see the recognition criteria. But that future economic benefits, when that point is not even mentioned, then you will have to rethink about it. It is just a relocation, and then you are not going to have some, future benefit out of this relocation. Then how much ever cost you incur, it should go to P&L statement only. Where will this go? It should go to P&L statement as an expense. That's it, not PPE.
sure, ma'am. Thank you.
Right? Now look at this illustration 3.
Omega.
Yeah.
Omega Limited contracted with a supplier to purchase machinery which is to be installed in its one department in 3 months' time.
This
Spatial
3 months
foundation.
is something which is important, right? They told it should be installed. You have purchased a machinery, but it has to be installed in your location or in your department, which is going to take 3 months' time. Fine. This is also important. Next.
Spatial foundation were required for the machinery which were to be prepared within this supply lead time. The
Which
cost
means,
of
just a second, which means what they're saying in this 3 months period, whatever we have, wherein installation will be done, they're telling you that a little kind of, alterations have to be done, maybe to your site or maybe to your location or whatever it is. It will require some kind of an additions or alterations to be done, right? Yeah, continue.
the cost of the site preparation and laying foundation were 1,40,000.
Okay. And
These activities were supervised by a technician during the entire period who is employed for this purpose of 45,000 per month.
now,
This
one
machine
question here is when there is any salary of a person or when there is some kind of a payment that is given to a person, it is like a salary. Generally, what did we learn? Salaries have to go to your P&L statement. Can salaries cost also be capitalized? Anyone? This is like a kind of a salary that we are paying to that particular person. Can we capitalize this? I want anyone to answer.
Yes, ma'am. Because it is, I think it's directly attributable, which is
Yes.
needed for the machine to run. So whatever expenses that is related, which the machinery to come to the location or to use, so it has to be
Usage.
capitalized.
Right, very
Yes.
good. Though this is a kind of a salary cost which generally have to go to your P&L statement, And here they clearly mention that this person is only employed for this purpose. He is not a general employee who works, in your normal routine business and also for this. It is not that case, right? Here he is like only specifically working for this kind of operation or for this particular machine only. So which means this is a very specific cost which have to be added to the cost of your asset. Okay, continue.
The machine was purchased at 1 crore 58 lakh and 50,000. Transportation charges were incurred to bring the machinery to the factory site. An architect was appointed at a fee of 30,000 to supervise machinery installation at the factory site. You are required to ascertain the amount at which machinery should be capitalized.
Yes. So they're asking you what will be the cost of your machinery, right? Now we have 1,40,000 as site preparation cost, 45,000 supervisor salary, then actual purchase price of the machine, then you have transportation charges, and then you have architect's fee. Let's see one by one if we can. You can see my whiteboard?
Yes, ma'am.
Okay.
Ma'am, there are transportation charges are also included in that.
Yeah. Take it. So what is the first price? When we were talking about the table, what is included in cost? The first thing that should be included is the purchase price. Then comes all other cost, right? The first thing that is required is what is the purchase price? How much did you purchase that asset for? How much it is?
1 crore 58 lakh.
Yeah. Then to bring this asset to your location, are you incurring any transportation or freight? Do we have any freight or a transportation given?
Ma'am, it is site preparation cost.
You also have transportation. Okay, site preparation also is there. Site preparation cost. How much is the site preparation cost?
And 1,40,000.
1,40,000. Transportation, because you have to bring it to your location. This is a mandatory cost which have to be incurred.
50,000.
50,000. Okay. And you have prepared the site now. You have purchased the machinery. You brought it to your location. Transportation is also done. Now what happens? It is taking 3 months time for you to finish this machinery installation. So I will require 3 months ka one supervisor who looks after this, right? So that supervisor salary also I will have to take. How much will be the amount? They told it is 45,000
for per month.
Yeah. So for 3 months you have to take, because this installation will take 3 months, as was they clearly told. So we have to take
1,35,000.
Okay. And do we have any other cost? We have taken
architect's.
Okay.
Mm, 1 crore 61 lakh 55,000.
16
155 000.
Okay. Since all these are like directly attributable costs which are mandatory to bring the asset to the location and the usage, we have included all these costs, right? Cost of PP.
Ma'am, I have a small doubt.
Yeah.
What is the meaning of capitalization, ma'am, of PPE?
Capitalization means, now this is the amount of cost of machine, correct? Now, when you're showing your PPE in your balance sheet, this is your balance sheet, let's suppose PPE, you will have to show that there is a machinery which is costing 16155,000. Capitalizing means showing it in your books of accounts as an asset. Okay, not capitalizing means what? If you assume that, let us assume, it is just an example. I assume that this should not be capitalized, which means what will happen to this? This cost will be taken to P&L statement. Okay, if you are capitalizing means what? All that will be added to the value of the asset and will be shown in your balance sheet. Not capitalizing means it will go to your P&L statement in the form of an expenditure. All these are costs only that we have incurred, but will it go to P&L statement or will it be capitalized and it will be sitting in your balance sheet will make the difference. When it will be capitalized only if the conditions are satisfied. Clear?
Yes, ma'am.
Ma'am, capitalization means those expenses we will incur which are directly related to our means what we are purchasing it.
Whatever cost we have incurred, all the cost whatever we have incurred will not be capitalized. No, there will be certain costs which have to be excluded. Yes or no?
Yes,
now let us go back to this. We saw these exclusions. Can you see my screen? In initial recognition, we have seen the exclusions. Can you see these?
Yes, ma'am.
Now, what happens to this inauguration cost? I told that it has to be excluded, correct? It has to be excluded means it should be completely removed from your books of accounts. No, right? It will be taken to your P&L statement. The staff training cost, it will be shown in your P&L statement. That is what it means. Administration cost, P&L statement. When we are saying that it is excluded here or it cannot be capitalized means it should go to your P&L statement as an expenditure. If it is capitalized means it will be added to the cost of the asset and it will go to your balance sheet and then it will start depreciating every year. Clear?
Yes, ma'am.
Okay, now look at this question, illustration 4.
Entity A, which operates a major chain of supermarkets, has acquired a new store location. The new location requires significant renovation expenditure. Management expect that the renovation will last for 3 months, during which the supermarket will be closed. Management has prepared the budget for this period, including expenditure related to construction and remodeling cost, salary of staff who will be preparing the store before its opening, and related utilities cost. What will be the treatment of such expenditures?
Okay, I want any one of you who can take up this question, since we have seen how to capitalize or how to see if the cost should be capitalized or not. Can you give a try, anyone?
Yes, ma'am.
Yeah. There are
Ma'am,
costs mentioned here. They told construction and remodeling costs, and then also they mentioned about the salaries of staff. Okay.
yes, ma'am.
Yeah. What do you think?
Ma'am, it's acquiring a new store in the location for a 3 months, but in 3 months, supermarket will be closed, and which
Right.
is second renovation expenditure are occurred on that, so it is added it, right, for a capitalization process. And second is a construction and remodeling cost also included in a addition of that particular asset. So in that salaries of staff will be prepared in the store. It also be added in the ma'am salary of staff who will be preparing the store.
Okay, now the salaries of staff, and then they have also mentioned related utility costs and all, right?
Yes.
So all these, now, like you mentioned, construction and remodeling costs, whatever we have to incur, can be capitalized as a PPE. Agreed. This will be capitalized, because if you're opening a new supermarket, obviously that is going to give you a future economic benefits, and they have also prepared a budget, so we have costs. So both the conditions are satisfied. You can capitalize the construction and remodeling cost. But when you're coming down to the salaries or other utility cost, these are mostly like your operational costs again.
It means a
These are,
P&L it goes, no?
yes, correct. These will be part of your P&L statement, and these cannot be capitalized, right? Because utility costs and all, if your supermarket, if your supermarket was open or it was closed also, you're still paying it. And if it was open, it will be like a normal operating cost only, your salaries and all. So it
It is,
has, yeah.
and future economic benefits are generated from that, which is new store.
From this construction and the remodeling costs, so you will capitalize that. But the salaries and the utility costs that are related to this kind of store preparation and all, those will be like operational costs, and they have to be taken to a P&L statement. You have to segregate. Is this cost something adding to my future economic benefits? Is this cost something required for me to directly link to my that is a directly attributable cost or not? That have to be segregated.
Yes, ma'am.
Ma'am, I
With
have a doubt.
and
Yeah, ma'am, here they didn't mention it's of own store or rented or something. But suppose if I go for a rented store and I wanted to do some changes in my store, so what I do, I make a changes like remodeling only. I make a changes. Maybe I will put a partition or anything I'm
They
going to do.
mentioned remodeling, like kind of remodeling only they're doing, because the store have to be according to their requirement. They're doing a little more remodeling. So that such kind of remodeling cost, if you don't do that remodeling, can you run that supermarket? First question. Any business, if you don't incur that cost, can you run your business and can you generate income? Can we do that?
No, we wanted that. Maybe for
It is
administration
important
also
cost.
it will be useful, ma'am,
I'm
because
sorry.
even for the administration
Hmm.
in the administration department
Hmm.
also, we may need
Hmm.
some remodeling cost.
Hmm.
It will be affected, no, ma'am. Like we need a partition of cabins or something like that, ma'am. So that
All
should
that
be
will be part of your remodeling cost only, na?
okay.
It can be for any purpose. Now, you can't say that when you are doing the remodeling, you can't say that I will use this for my operations, I will use this for my finance, I will use this for. We can't say that. No, when you're remodeling, you do the entire remodeling of your business, or you incur the remodeling cost for everything, for the entire supermarket. Yes or no?
Yes, ma'am.
So, total remodeling cost you will capitalize. But when you're starting to think of about other operational costs like these salaries or utility costs, matlab, what kind of expenses that you incur daily, right? All these kind of costs are operational routine cost, which you can't add everything to your cost of PPE. They have to be taken to your P&L statement.
Okay, because in the department and all, like when you're doing for the administration part, like putting partition and all, ma'am, we will not see anything like asset. How to say? We will not see machinery over there, but there will be partition will be there. Once the partition has been removed, it may be used or it may not be used also, right, ma'am?
But
So
still,
that
you are
kind of
including
cost also
some.
will include it as a asset.
Still you're incurring some kind of a capitalized cost, no? It's like initial
Yes.
cost, which is mandatory for you to have that kind of a store. So it can be capitalized.
Okay.
Yes.
Okay.
ma'am, and utility cost we get example as a electricity bill.
Yes. Power bills or other kind of bills which are incurred every month regularly.
Which is recurring basis, right, ma'am?
Yes, you're right. Now let's look
Ma'am,
at this. Yeah.
ma'am, why we have not added this, ma'am, three renovation cost? Because we have done it renovation. No, ma'am, it will be included. It is the other attributable cost, ma'am.
I didn't get your question. Can you repeat?
Ma'am, the new location requires significant renovation expenditure. Management expect that renovation will be last for 3 months.
3 months,
Due
yeah.
the market will be closed.
Continue, ma. What is your question?
So, ma'am, we are doing means management is expecting that renovation, ma'am, 3 months में होना चाहिए.
A renovation will take 3 months, and then during that 3 months, you will not have any operations. I mean, all the supermarket is closed. But then these utility and salaries, what they're talking about, have to be paid, no? You can't say, since you closed your business, can you say that I will not pay my power bill? I will not say that I'll not pay my rent, or I'll not say that I'll not pay my staff ka salary and all, no? You'll have to hold them for 3 months. Yes or no? So these are recurring costs which are mandatory to be incurred every month. Whether you are running your supermarket or not, still you have to pay them. That's why these will be operational costs and have to be taken to your P&L statement. Is that your question?
Ma'am?
Yeah.
Ma'am, in that question is given, illustration 4th is given as a salaries of staff who will be prepare the store before its opening and a related utilities cost.
Yes.
But take as a salaries of staff who will be preparing the store before its opening. Means not a operating cost, no, ma'am.
Can we say that I am only using the staff for this purpose? We can't segregate that, no? See, if you see the previous question here, what happened? He clearly mentioned that the technician was brought in for 3 months for this purpose only. It was very clear. Yes.
Directly given.
Yes. Now in this question, it is not like that. It is like staff. You have a staff you are using because you have closed down your supermarket. You are using that staff for this, opening car and all those. You are using them for that. But it is not that these staff are hired only for this renovation. No, we can't say that. That's a general salary cost only.
Yes, ma'am. Yes. Right.
So, ma'am,
And
here construction.
management utilities costs are also given and related utilities costs also
Yes.
given. It means it
Same
is
thing.
operating as well as for the before the opening of that store.
Yeah. Before also we were paying that, and during that 3 months closure also you have to pay, and later also you will pay. So it will be a
The
general
special
recurring cost.
is a time also given and specially given as a for this purpose only as a.
Yes.
So, ma'am, in this we will take only construction and remodeling cost.
Yes,
And
construction and remodeling cost will be capitalized because that is needed for your supermarket to be ready in 3 months, and then you have to start your operations. Only then you will have revenue coming. Correct? But these salaries and utility costs are like an operational cost which will be taken to your P&L statement.
Ma'am, if you don't mind, had this question. If you compare this question with illustration 2, where it says they were closing down the factory to build a new plant and putting the machinery. Here also in the illustration 4, you assumed that the cost, they didn't talk about any future economic benefit. So you're assuming here it is for future economic benefits. And
See,
it is
this
not the
is
way
okay. Finish your question. Yeah.
in way make business. So there also, if plant is not there, I don't have a business only to run, right? Plant, if it is not moved and it doesn't start production, I can understand rent going into like not being capitalized. Setup cost can be capitalized, no?
See, here they mentioned about the redevelopment period, and they're talking about the facilities that they're moving to the temporary site, right? It is not about the freehold property cost. Did they here mention anything about the freehold property cost? Did they say that for freehold property, I will have to incur for doing that redevelopment and all that? I'm incurring some cost for freehold factory. Nothing like that, right? They clearly mentioned about the rent that they have to pay to the temporary site.
Yeah, I got the point.
And ma'am, I want to add it in this point. Illustration number 2 is given as a for existing properties redeveloping. It means we take as a we added in no ma'am redeveloping expenses, which is not given in that illustration actually, but I am taking the part of that for the understanding purpose. So property which are going to the redeveloping. So it is redeveloping expenses are also included, no ma'am, in a balance sheet, in a PPA for that particular asset.
In this example?
Yes, ma'am. Yes, we just assume it.
We are assuming?
we assuming that only ki redeveloping expense on that existing freehold property which are included in that, no? We added in at the end year of the end or whichever the period of for given for the redeveloping time.
Yeah.
Okay, ma'am.
Ma'am, one small clarification, ma'am. In illustration 2, it is of already existing
Property.
existing machinery. We are taking from our old location to new location.
Mhm.
That's why it has not been included in the cost,
Included.
right, ma'am?
It is mostly like a relocation that we are doing.
Relocation means the same machine. Suppose if you purchase a new machinery, then
Then
that
that will be
installation
a
cost
PPE.
will be taken for the
Yes.
cost.
Yes.
Otherwise, it will not be taken, right, ma'am?
Correct. If you're actually buying an asset, then you do the installation. Obviously, that will be a cost that should be added to your PPE. But it is like just moving to a new location, no? Then that because you're moving to the new location, you can't say it will increase your future economic benefits, correct?
Yes.
But when you're actually purchasing a new one, then that is going to add your future economic benefit. That's the difference in this question and the fourth question. Are you seriously creating a new one? Or it is just that old one you're moving to a new location. That's the only difference.
Okay.
Correct?
Yes, thank you.
Ma'am, I want to add something which is come in mind now. Ki machinery as example for the PPE. In that PP as a machinery, if we taken for machinery we goes for the repairing for the 3 months and we taking machinery on a lease for the 3 months. So in that case, which is machinery we taking as a lease, so it is not the future which is not included in the ma'am balance sheet of that particular machinery which are already existed or which had go to the repairing and repairing costs are added in, no ma'am, in that
Repair
machine.
cost, we will have it in the coming slides. Repair cost has again a condition. You can't add all repair costs and all that. We have a condition. We'll see that when we are looking at the subsequent costs. We will see that about repairs and all that. Okay.
Okay, ma'am. Okay.
Now there's one more question, small question. Let us finish this also. Illustration 5.
An amusement park has a soft opening to the public to trial run its attraction. Tickets are sold at a 50% discount during this period and the operating capacity is 80%. The official opening day of the amusement park is 3 months later. Management claim that the soft opening is a trial run necessary for the amusement park to be in the condition capable of operating in the intended manner. Accordingly, the net operating cost incurred should be capitalized. Comment.
So the management's intention is what they're saying. Since we did not start the operations and operations officially will start after 3 months, until then what we are doing a trial run. That is what they're mentioning. So until then, whatever operating cost we have, I will add it to the cost of the asset. I will capitalize it as what the intention of the management. What do you think? Is it correct?
Ma'am, I have a point in that. Tickets are sold at a 50% discount, and operating capacity of that is a 80%, right? So in that 50% which are discounted on to the customers of the park, amusing park, in a startup period. So, ma'am, we added no, ma'am, this for 50% of discount in the asset.
Where will you add this 50%?
Means it's a discount, or it is going to the PNL or not?
No. They are saying that if suppose the ticket cost is 100 rupees, okay?
Yes,
The amusement park's ticket cost is 100 rupees. They're giving it for 50 rupees only. It is because it is a trial run, they're giving it for 50% discount. That is what they're trying to tell you. Which means my revenue will be 50 only. It won't be 100. Until the trial run is completed, I will have revenue only for 50 rupees per ticket. Okay. But the question here is, should we capitalize the net operating cost? Operating cost we will have, no? To run that particular amusement park, you will incur some costs, right? Maybe you'll have to pay salaries to that persons and you will have to incur the cost of fuel because you have to run those machines and all that. All operating cost they're talking about. Should that operating cost be capitalized or it should not be capitalized? That is a question.
Okay. No, it should not be capitalized, I think.
Why it should not be capitalized?
Because it's operating cost.
Operating
I
cost, but they are saying that it is a trial run, no? So we want to capitalize. So what do you say?
Management.
Now it is capitalist
I'm sorry.
because
Ma'am, I think it should be capitalized because they have clearly told the park is not being opened for 3 months, and whatever testing they are done, they're doing right now is have to be done. It is necessary. Here they
Okay.
are at least saving on that 50% cost of not paying somebody to come sit in the machinery to do the exercise. They're at least generating some revenue and cutting out on some loss. The other part should be capitalized.
I would say no. Why? Because they started earning revenue already. Though it was a trial run, their capacity was 80%. They are not, maybe they are not running at full capacity, but still they started earning revenue at a discounted price. Maybe they're not getting 100 rupees per ticket, but at least at a discounted price. If they're selling, 200 tickets also, some sort of revenue is generated. And cost is also incurred. When your revenue is generated, when your cost is incurred, it means you have started your business. Maybe it is a trial run, you're not running at a full capacity, but still you have started running your business. Then whatever operational cost you have cannot be capitalized. It should go to your P&L statement only, for sure. Is that
Ma'am,
clear?
I have a question. If the statement was they didn't sell the tickets, but the park was operational for only trial runs, then you would have capitalized the cost, right?
Then again, we must have considered what is included in that net operating cost.
No,
Okay.
no, they are not selling the tickets only, like 0 rupees.
Okay, fine. But tickets is revenue, no? This is revenue. I'm talking about cost. Cost may what are included? What are there in their costs? Is that cost mandatory for you or not? That is also have to be considered. No, we can't only think about one perspective. You would have to also think from other perspectives also, right? What is included in that cost? Is something that have to be added to the asset cost or not? That also have to be considered. Operating costs are generally not added to the cost of the asset, with a condition that if that operating cost is something which is needed for you to bring that asset to your location or usage and all such conditions, only you can add it to the cost of the asset. Otherwise, it will be a normal cost which should be taken to P&L statement only.
Then the statement here saying trial runs are necessary for the amusement. Doesn't it mean like the example we told, like where the place had to be made ready, like the cement structure had to be poured for the machine to set, or these number of testings had to be done for the machine to be perfected? Doesn't this come under the same category of that? Because
Trial
if
run means what? The machines are already ready. Agree?
yes,
Machines are already ready. We are just running a trial means machines were already ready. All the setup cost was done, right? If I have to set up a machine, this is a cost which can be taken to PP. Yes or no? But the
yeah,
machine is already set up, machine is ready, it is grounded to the floor. I just have to run that, there's an giant wheel or something, it is ready already. I don't have to incur any setup cost or installation cost. Then that means all that is ready, right? I'm just doing a trial run means what? Trial run mein kya hoga? You'll only have that cost of fuel and few things about the salary to be paid to that person who is running it, and maybe other some maintenance cost only will be there, no? All these cannot be capitalized now. You have started trial run or you started running the business, that's it. Whether it is a trial run which is needed or not, you're running at full capacity or not, you have started running your business, right? So all these costs have to be taken to your P&L statement. They cannot be capitalized.
Ma'am, I want to add it in this point. Ma'am, if you say ski, it's before the soft opening of the as amusing part, which is actually added in the property plant and equipment, ma'am, right?
Which one?
And
I'm talking about the machine cost here, which is taken to
yes,
the
any fuel expenses on that in trial time, it is we added, ma'am, in the which is property plant and equipment, right, ma'am?
Why?
Means we added, no, ma'am,
Why?
because during that 3 months, which are the for the soft opening by the management
Hmm.
as a trial run necessary, so we added, no,
Hmm.
ma'am.
Why?
Or,
It is just because it is trial run you will add. That's what I'm asking. Just because it is trial run, we can't add. No, you will have to see what is your capacity. Are you running at your capacity? Did you start earning your revenue? That should be considered. No, you can't just say, since it is a trial run, whatever cost I incur there, I will add it to my cost of the PPE. We can't say that. No.
Yes, ma'am. We not started after 3 months is the official date for that opening. Okay,
So
ma'am.
machine cost capitalizing is fine, but then any operating cost also you will capitalize. It is not reasonable, na? Because you already started earning revenue, you started incurring costs, which are operational. They clearly told it is operating cost only. They mentioned it is operating cost only, na?
Yes, it means illustration 5 is showing as operational cost, which are different from the addition of the asset cost, right?
Yes, yes.
Okay.
We are completely talking about the operational cost. What we will have to do with the operational cost? Should you capitalize them or not? Operational costs are not capitalized. Operational means it is to run your business. No. Operational means what? Non-operational and operational. Operational means what? It is to run your business in that flow. When you started your business has to run every day, and the routine has to go on. There are few recurring expenses you will incur. Can you say all these recurring expenses will be added to the cost of the asset, cost of PPE? We can't do
No,
that, right? Operational are different, and few costs which have to be added on non-operational are different. So that segregation should be there. Only then you will capitalize.
okay,
All the
I'm just
costs we cannot capitalize. No.
one question in point. Ma'am, I just asking just if the after the all expenses cover in the trial time, if any surplus amount is remain or in the as a profit, so we can say as we transfer to the P&L when the official date are in coming, means after the trial time we added to the opening balance of a P&L of an amusing park.
It will be in P&L only, no? Your revenue is going to P&L. Your cost also is going to P&L. So if you had any profit, it will be in your P&L statement only, no?
Okay, ma'am. Okay, understood, ma'am.
Ma'am, I have a different question. If there is a R&D or not research and development, if there is a testing for the machinery only going on, couldn't it be also capitalized? Not like not
Testing will be again different. Okay, if the testing is needed, to run that machinery, without which you can't go into operations, then it is a cost which have to be added to the cost of the asset.
Okay.
Testing is a mandatory thing, which is compulsory. The condition is what I'm telling you. No, you have to remember only one point: is that cost needed for you to, bring that asset to your location or usage? If it is yes, then you will capitalize. If it is no, then you will not capitalize. It will go to P&L statement. That's the only logic you can remember. Along with that, definition and recognition criteria also. I won't say ignore them first. They have to be considered, and also when you're talking about the cost, you have to think about these also.
Sure, thank you.
Now look at this one point. I think we talked about the initial recognition cost, inclusions and exclusions, and we have seen few examples also how it works. Now I'll give you a small example of what is this income earned during the development of PPE. What happens in few cases is you are actually maybe constructing something. Okay, some construction is going on. Now during this construction, you might have some income. Okay, income coming up. How is a best example is you're constructing a building. Okay, when you're constructing a building, your building is being constructed. It will take time, so you have a space. This space you have given for parking lot. Okay, you will earn income on this. You'll get some income. It might be very minor income, but still you get some income on this, right? So such kind of incomes, whatever you get, is what we are talking about here. Income earned during the development of PPE. My building construction is still going on, but I have earned some partial income out of something that is coming out of my product. Now you'll have to think about two things here. Is it a directly attributable income or not directly attributable income? Directly attributable means what? Now when you're constructing this building, you'll have some scrap, maybe the iron that you have, cut iron, which is a waste, or you have some bricks which are spoiled, which cannot be used for building, or leftover items, the scrap material, whatever you have. If you sell them, you will get some income. This is called directly attributable income because it is directly relating to my construction of building. This is called directly attributable income. But this parking lot ka income, whatever you have, is a indirectly or not directly attributable income. That's the difference. Which one thing, either it should be part of your, if you're doing some construction of an asset, if the income whatever you receive is something, it is proportional to the income that you receive, then good, it is directly attributable income. Otherwise, you might have other incomes also that will be a not directly attributable income. Why we are segregating this, the treatment for these two is different. If it is directly attributable income, then you can adjust to the cost of PPA. If it is not, then it is taken to P&L statement, which means now, like I told, the sale of scraps and all, right? When you're constructing building, the scrap material, whatever you have, is sold. Now, for constructing the building, the cost of construction for me came down to some 10 lakhs, cost of the building. I have sold scrap. The scrap gave me some 10,000. Now, what will be the cost of PPE? Cost of this building? It will be 9,90,000. Agreed, everyone? Are you all here with me?
Yes, ma'am.
Yeah. So this is one way. If that income is directly attributable, this is one way you do. Now, the other way is cost of building 10 lakhs will be there. Suppose you have the parking lot ka income. That will not be added here or that will not be removed here. Cost of building will be 10 lakhs only. In your P&L statement, on your income side, you will show parking lot income of some 1 lakh, whatever 1 lakh or whatever income you see. So if it is an indirectly attributable or not directly attributable income, then you will do it this way. The income will be taken to P&L statement. But if it is directly attributable income, then you will adjust it in your PP, cost of PP. Any sales that you have, I will adjust in my PP. This difference is clear? You should only understand if that income is coming as part of your construction, or asset, or it is not part of my asset. That's it.
Yes, ma'am, understood. And you give as example as a machinery, or not, sorry, not a machinery, as a parking site. From that, any income received, we taken from in a P&L as a other income, right, ma'am?
Yes, yes.
Okay.
Other income, you will show it in your P&L statement here. Yes. Okay. This is the summary of the initial recognition cost. We have seen a question also on this, right? Purchase price, and I talked about the non-refundable taxes, then any trade discount you will remove. Any directly attributable expense or income, both. We just talked about the income here, any directly attributable income, right? And expense we already know, directly attributable expense we have discussed earlier also. And estimation of restoration, this we talked about when we were doing the inclusions, decommissioning and restoration. So these will be part of your cost of the asset if you have purchased the asset, right? What is this first one that we are talking about? If you have actually purchased the asset, then what will happen? The purchase price, the taxes that you pay, discount you get, rebates that you get, and then any directly attributable income or expense and restoration, everything have to be considered when you are actually purchasing it. But there's one more kind of asset that you can have, which is self-constructed, which means what? When you are actually constructing it, you didn't purchase. Purchase matlab kya hai? When you went to the supplier and asked, I want a machinery and I want it installed in my location, that's a purchase. But if you are constructing that machinery, then that is called self-constructed. Then what will happen? The material cost, labor, fixed and production overhead, these three will be additional cost. Agreed? If you purchase price, if you are constructing, then material, labor, and overhead cost have to be considered. These three will be the additional cost. Rest will again remain same. Directly attributable income or expense, restoration if any. And then the borrowing cost is again a new point. This will come only in case of self-constructed asset. What is a borrowing cost? Why it is for only qualifying asset? Everything we will discuss when we are discussing the borrowing cost standards.
ma'am.
Why only for few assets you will add it here? Why not for all the assets? What is a qualifying asset? Don't worry about that. Borrowing cost, we have a specific standard only for this. So there we will discuss this point. Okay.
Yes, ma'am.
So this summary is clear, wherein initial recognition, if you're purchasing, what kind of costs are involved. If you're actually constructing self-construction, then the material cost and all those will be involved.
Ma'am, illustration 2 we taken as example, ma'am, self-constructed type.
Illustration 2 talked about?
Yes, ma'am. We taken as example self-constructed.
What was that talking about? Illustration 2? I don't remember this. I'm just asking you. What was that talking about? Illustration 2?
It was a redevelopment.
Ma'am, I don't think so. Illustration 2 would be considered because we were talking about we shifting the machinery to a temporary. Yes, so those costs are not capitalized.
Yes. Illustration 3 is the best example for purchase because you just purchased and just did the installation. Illustration 2 is like only shifting it. You're right. Illustration 4, it was talking about the remodeling cost and all.
And illustration 50 is right for that construction, self-constructed.
Here they didn't give you anything about construction costs, no.
Okay.
It was only operating costs. They didn't give you anything about construction cost and all. Maybe a part of this fourth question we can say cost of construction and remodeling. This we can say is a self-construction. This we can say, but it is not like completely. It is. It will involve raw materials. It will involve labor and all, but not to a greater extent. A smaller extent only because it is mostly about renovation. So you already have a building. You're just doing the renovation part. But completely self-construction is like you start from the zero. You have to bring all the raw materials. You have to have hire labor and then start doing all construction. I don't think we have an example here, but if it might come up. Don't worry. We'll
Yes,
see.
ma'am.
Ma'am, I have a small doubt. For directly attributable income in illustration 5, illustration 5 we saw, right, ma'am? We've run machinery for trial run and we earned revenue out of it. Can we take that as an example, ma'am, for directly attributable income?
It is not a additional income, no? It is the main income, na? The trial run that what we are doing is a main income, no? We can't say like it is a income that is coming as part of your business. Is it like a separate income that is coming part of your business? No, it is not like an additional income. No? It is the main income, main source. No, you got my point?
Okay, ma'am.
This whatever I was talking about here in the income earned, this is like not the direct source. Okay. It should be as a source which is additionally coming up. This income is additionally coming up other than your main asset.
Okay, so trial run we can't take as an additional.
No, it is also a part of your main source, no?
Okay, ma'am. Okay.
Ma'am, if you don't mind, I had a very weird question. Like, any losses that we incur while creating a capital asset, will it be capitalized?
Any loss? Okay, what kind of loss you mean to say?
Like I had a floor plan for a building. We constructed a building, but we came to the understanding that there was some error in this, so we demolished it and rebuilt a new place. So it is a double cost. Should it also be capitalized?
Now,
Or
what will you capitalize in that? You tell me. I mean, suppose. Continue.
The loss that we incurred on the first building. The first
that
time
should be taken to your P&L statement. No, when you are doing a construction, your asset should be ready. Your asset should give you future economic benefits. Only then the asset cost will be capitalized. Is that our condition?
Yes.
Now, in the demolition that you're doing, do you have an asset which will give you future economic benefits?
But if it is not done, I won't have any future economic benefits also, right?
Yeah, that's what your question here is that demolition that you have done, because of this demolition, the asset is no more there. When the asset is only no more there, how will you capitalize the cost of the asset? That is what I'm asking. You're reconstructing. That reconstruction cost, whatever cost you incur later will be again capitalized. But this cost, whatever you incur till date, did not give you any future economic benefits. Agreed? Now,
Then
till now you have incurred 2 lakhs, let us suppose. Okay, 2 lakhs you have incurred till date. Now, this 2 lakhs, whatever you have incurred, will this give you future economic benefits? The asset is not ready. You're trying to demolish the asset. So, no future economic benefits, no. So, this will go to your P&L statement only
okay,
as an expenditure.
Adding to this question, I had one more question. Like remodeling, or think we had a land, there was a building on it, but we had to demolish to build a new factory. So the demolition cost can't be capitalized. Huh?
Is that demolition mandatory for you to start your construction and then have a new one?
Yes.
Then it should be capitalized, no?
Here in this example also, it is mandatory for it to be removed, then only built.
I'm not talking about the demolition cost. Did I talk about demolition cost here? I only talked about the cost you incurred till date.
Oh, okay. Got
Till
your
date,
point.
you already incurred some cost, no? That will go to P&L statement now. That's what I'm saying.
Yeah. No.
I think you are searching for all the permutations and combinations to confuse yourself. Don't confuse so much, no?
No, got the point. Thank you.
Cool. Right. Shall we finish this and then take a break? The small part?
Yes.
Okay.
Or you want to take a break and then come back? What is the time?
We'll finish the one.
Okay, we'll finish this. Right, fine. So there are 2 things here we will have to discuss. One is with commercial substance and without commercial substance, right? Now this part will talk about the exchange of assets. Exchange of assets means what? Now I have an asset A. Okay. Now I want to give this asset and purchase asset B. Which means what is happening here? I wanted to actually purchase asset B. If I have to purchase asset B, I will have to pay some cash, no? That is what generally happens when you're purchasing an asset. You purchase that asset and pay some cash, correct? Generally, that's how a purchase is made. But what I am doing is, I am not giving any cash. I told that supplier that I will not give any cash. I will give you this asset A. Take it. So it is like an exchange in the form of a non-monetary thing. No cash is involved here. I am buying. This is what I have purchased. This is what I have bought. But what did I give in return to that supplier? Not cash. I gave some other asset. Some other asset I gave. Is this clear? What we are trying to talk about in this part is about the exchange that happens when it is not for monetary item. It is not for cash. You are exchanging it in the form of some other asset. Clear, no? What we are talking here?
Yes, sir.
Now, what is this commercial substance and what is this no commercial substance? Let us see that. When the transaction has commercial substance means what? Now, when you're doing the exchange of that asset, is it a meaningful exchange or not? That is what we have to see. Meaningful exchange, which will give you future benefits. Right? Is it giving you future benefits? That is that a meaningful exchange which will give you future benefits, which are we can say higher cash flows. Higher cash flows. This is called with commercial substance, which means what? Now, whatever asset A and B I am exchanging, these are like almost a similar kind of assets which will give me higher benefits. Now, why did I exchange this asset A with B? Because if this asset A is going out, asset A used to give me only 1 lakh revenue. But if I exchange this with asset B, this will give me some 2 lakhs revenue. Do you think is it a good exchange which has a commercial substance? Yes or no?
Yes, ma'am.
Now you're clear what is a commercial substance? When some exchange happens, that will give me, more benefit than whatever I had, whatever asset previously I had. That is called a transaction which has a commercial substance. My benefits are higher than whatever I have exchanged for. That is one thing. No commercial substance means what? You randomly exchange it. Okay. Now this asset A and B are like almost similar kind of assets, but the other asset is an upgraded version. So it will give me good benefits. I have exchanged it. It is good. But some random asset is exchanged. Okay. You exchange car for some machinery. Do you think this is a commercial substance transaction, a transaction which has commercial substance if these two are exchanged? You got my question?
Yes, ma'am.
So is this case called which has a commercial substance or no commercial substance when car is exchanged with a machinery?
No, ma'am.
Mostly no, right? Because it is not interlinked also. The assets are not
It
interlinked.
is not a future economic benefits.
We also cannot say that it will give you a same kind of a benefit also, right?
Yes, ma'am.
That is called with no commercial substance. And if the transaction is having commercial substance means what? It is going to give you good higher benefits. In this case, that kind of higher benefits or higher cash flows may not be there in this situation when there is no commercial substance. This part
Ma'am,
is clear?
in point, transaction as a commercial substance, in that you taken as a example of A and B asset, which are extended between each other, and why A are sold his asset for B because we are giving them as a future economic benefit in additional, which means level of normal level capacity and higher, more than but or equal to. मैम आई हैव क्वेश्चन इन दैट अगर इक्वल होगा और या उससे ज्यादा फायदा होगा ए वाला
Yes.
तो
Yes.
इन दैट केस मैम ए वाले इक्वल भी चलेगा ना मींस अगर ए और बी एक्सचेंज कर रहे बिटवीन ईच अदर एसिड्स
Equal benefit also is fine. Like you
Okay.
get an equal benefit, but you just want to upgrade the version, then you keep
More.
exchanging. No, that is fine.
More economic.
But then if you don't have that good benefit, previously my asset was giving 1 lakh. Now if the asset is giving only 50K, it doesn't make sense only to exchange. No, so such
Yes.
kind of transactions are generally done. Because I just want to throw out my asset, I do the exchange somehow with some other asset. That's it. So such kind of transactions are said that there are no commercial substance involved in it.
And also second point, ma'am, we can say as a businessman, I am selling my asset to the B, and I have one not a one purpose, which is a future economic benefits. Say I also second purpose, which are the cost reduction. Even I am doing a next time, which you said as a upgrading to yourself as a businessman.
Yeah.
So we can say as a upgradation cost, we also say that we are reducing our cost, no, in that exchange of time means exchange way.
Yes.
Okay, ma'am.
You're right.
Okay.
Okay. Now, when there is a transaction with commercial substance, then how do you, record for or how do you account for the cost of PP? And when there is no commercial substance, how do you record for us? In this commercial, when there is a commercial substance that is existing, you'll have to go in order. Okay. You'll have to first see what is the fair value. What is the fair value of asset given up? Asset given up means what? Whatever asset you are giving, that asset's fair value will be considered first, which means asset A ka fair value should be considered first. Okay. If that is not available, then what will you do? Asset B's fair value will be considered for cost. Are you all with me? Yes. What is the first thing that you have to see? Or the order of preference is like this only. You have to first see whether the value of the asset given up. Given up means whatever I have given as a part of exchange, that asset's fair value is available to me or not. You'll first check that. If that is available, then take it as your cost of PPE. Okay. If that is not available, move to the second option. What is the fair value of asset B? If this is also not available, then you will have the WDV of asset A. What is WDV? Which means this asset A must have been purchased for some cost and you must have depreciated for some number of years. So you have a carrying amount or the written down value of this asset that will be considered.
We deduct accumulated depreciation, no, ma'am, in a return down value calculation.
Yes. Accumulated depreciation. Okay.
Yes, ma'am.
And in case there is no commercial substance, directly go to WDV of the assets given. The third option, whatever we have. We'll see an example.
Good morning, ma'am. Like, why don't we consider market value, ma'am? Like,
fair value is market value only, na? Fair value means what? What is the value
Okay.
that is existing in the market? WDV means what? What is the value that is existing in your books? Yes or no?
Ma'am, fair value is different compared to market value, right? Like,
These two are mostly interchangeably used. Fair value means what is the value existing in the market. Yes, that's kind of market value only. Yeah.
Ma'am, I have
okay,
added in
ma'am.
this.
Ma'am,
Yeah.
Ma'am, I want to add it in this point. Uh, as per the student is say he or she is saying that he अगर इसमें fair value and the market value, right? So in previous lecture in AS2 you said ma'am कि AS2 we taken as a market में क्या rate चालू हुई for that particular inventory, then we taking no ma'am, that is the fair value no ma'am, we
Whatever is
taken
the
as a, for
whatever
example
is
for
the value existing in the market will be the fair value that you will consider. Yes.
I just taken as a defined to the that particular fair value and the difference between the market value. So fair value means जो चालू है rate बाजार में.
In the
It means no.
market.
Yes, ma'am. It is a fair
I mean,
value.
if you have to purchase that particular inventory or if you have to purchase that asset in the market right now, what is the cost? This is nothing but the fair value.
Yes, ma'am. That is the we say कि हाँ बाजार में जो rate चालू है that is the fair value.
But WDV means something that is existing in your books of accounts, no? You
It means
must have purchased, 10 years back, you must have purchased it 10 lakhs. And for 4 years, you calculated depreciation, which is almost 4 lakhs. Now, what is the value you have in your books of accounts? Only 6 lakhs. This is WDV. No?
Right, ma'am. That is the written down value.
Yes,
6 lakh.
written down value. Or we also say carrying value. No? This is also other word we use for WDV, carrying value. Which means
Yes.
what is the value existing as on that balance sheet date or whenever you're doing that calculation on that date, what is the value in your books of accounts. But fair value is what is the cost if you have to go to the market and purchase that particular asset.
Ma'am, in that case, you saying it 10 lakh minus accumulated depreciation 4 lakh, so 6 lakh as a in our books written down value. And if the market, I just assume that in market it is a 5 lakh right now. So
Question we
what
will do.
in
Don't
first?
worry. That part we will do. We have a question
Okay,
also
ma'am.
that
Okay,
we
ma'am.
will. How it actually works, we will see. Okay, take a break and come maybe because this will take some time to do this question. There are two questions. We'll do both of them together with commercial substance and without commercial substance. Both the questions will
How
do.
much time break, ma'am?
Don't take
How
too
much
much
time?
time. Just be back in 5 to 10 minutes. Okay.
Okay, ma'am.
Technical team will take a break for 10 minutes. Can we start?
Hello, ma'am.
Yeah.
Ma'am, in study mat, I have doubt in page number 5.33. So in that, ma'am is given point which is decommissioning, restoration, and similar liabilities. In that,
We
ma'am, can
discussed
you
that
explain the
already, no?
ma'am, I'm not on that time. So can you, in short, you explain the exception for that point, which
We'll
are
do it in the
included?
end then. We'll do it. It's only for you. We'll do it in the end. Okay?
Okay, ma'am.
In the
Okay.
end, remind me
Yes,
when we are
ma'am.
closing the session.
Ma'am,
Ma'am,
fair value is based on. Hello, am I
Yeah,
audible,
yeah.
ma'am?
Yeah.
Ma'am, fair value is basing on basing on a standards and everything, right? And market value is basing on demand and supply.
Hmm.
Am I correct, ma'am?
What standards you mean to say?
Like IFRS,
Hmm? How will you
like
calculate them?
normal
How?
transaction based, which is simply calculate. Like normally, for example, let us take the machinery. Like normally, we'll add up all the costs on an assumption basis. Like
Your voice is breaking.
what are like tools and
Your voice is breaking.
equipments we install and everything on a normal basis. We add up everything and we deduct whatever. Ma'am,
Are you there?
Ma'am?
okay, ma'am.
Yeah.
Ma'am?
No, ma'am.
I don't think you have signal.
Ma'am?
Yeah.
Ma'am, that what we are discussing, the transaction has a commercial substance and transaction has no commercial substance.
Mhm.
Ma'am, in transaction has commercial substance, we will measure first fair value, a fair value of asset given up. If it is
We'll
not
see.
given
We'll
up,
see. We are doing that question only. You will understand more clearly. Don't worry about that. We are seeing a question on that only. Okay. Let me finish these two illustrations. Then, if you still have questions on this, then I will take it up. Because listening to a theory thing and then applying it on a problem example will be completely different. You'll have a better picture. Is what I feel. Let me finish these two illustrations. Then. I'll take up the questions on this fair value and WD. Is that fine?
you can.
Yeah. Yeah. Look at this question once. Read this question.
Entity A exchange land with a book value of rupees 10 lakh for cash of rupees 20 lakh and plant and machinery valued at rupees 25 lakh. What will be the measurement cost of the asset received? Consider that the transaction has commercial substance.
Has commercial substance. They clearly mentioned that we will have to consider that there is a commercial substance. Now, there are few exchanges that happened here. Now, what is going out and what is coming in? Let us see that. Okay. Now, land is one thing. Cash and plant and machinery is one thing. Agreed? There are two things here. One is land, and the other one on the other side will be cash and plant and machinery. So what is happening here is land ka value is 10 lakhs and for giving this land, what did we get in return? We got cash of 20 lakhs and a plant and machinery costing 25 lakhs.
25
Is this
lakhs.
part clear from the question? That I have exchanged land with cash and plant and machinery. So in return, I got cash of 20 lakhs and a plant and machinery of 25 lakhs. This part is clear?
Yes, ma'am.
Right. Now, there is a commercial substance means the order that we have to follow is what? For calculating the cost of the asset, you have to first see what is the fair value of the asset given up, then fair value of the asset received, then both are not available, then you move to the WTV of the assets given up, correct? Right.
Yeah.
Now, do we have fair value of the asset given up? Fair value of the asset. What is the asset given up here?
20 lakh is fair value, ma'am, for land.
What? First of all, what is the asset that is given up?
Land.
Clear? That is clear. The
Yes.
asset that is given up here is land, for sure. Agreed, everyone?
Yeah, agreed.
Please respond. If you're responding in chat box also is fine, but keep responding. Land, okay. Now, what is the asset that is received? Cash and plant and machinery. Correct?
Yes, ma'am.
Yes, ma'am.
Right. Now, the
Yes.
first thing that you have to check is what is the fair value of the asset given up, which means what is the fair value of the land? Do we have the fair value of the land given in the question? That's the first question. Do we
No,
have
ma'am.
the...
No, ma'am.
We
We
don't
have book
have the
value.
fair value of the land. They gave the book value of the land. Yes or no?
Yes, ma'am.
Yes,
Book
ma'am.
value.
So the first option is not available to us. Now let us move to the second option. What is the second option? Fair value of the assets that you have received. What are the assets that we received? Cash and the plant and machinery.
Plant and machinery.
Yes.
Plant.
Do we have those values
Cash
with
and
us?
Ma'am, fair value, not.
Now, they told cash will anyway have no fair value or nothing like that because cash is cash anywhere. Plant and machinery is valued at 25 lakhs. When they told fair value means here, can we say that the person's books of accounts made the value is 25 lakhs? Will anyone tell you that in my books of accounts I have 25 lakhs and all these things? Nothing like that, right? They will tell you the value, whatever is mostly existing in the market only. The plant and machinery is valued at 25 lakhs means this is the fair value of that asset given up, right?
Yes, ma'am.
So what will be the value that you have to take? 20 lakhs and 25 lakhs. Agreed, everyone? The cost of the asset?
Yes, ma'am. Agreed.
Yes, ma'am.
Sure. Now, what will be the journal entry? Let's also see that. What is the asset that is coming in and what is the asset that is going out? Accordingly, you will have to debit and credit. What is coming in? Cash is coming in.
Cash and
20
plant.
lakhs. Yeah, plant and machinery. Sorry, plant and machinery is also coming in. How much is the value of plant and machinery? 25 lakhs. These two have to be debited.
25 lakhs.
These two have to be debited because these two are coming in to the organization. What is going out now?
Land for 10 lakh. And remaining balance, profit on sale of land, which is balancing figure, 35 lakh.
This is debited and this is also debited. Now what is credited? What is going out? Land is going out, correct? Land is going out. What is the value of land that is going out? 10
10
lakhs.
lakhs.
10 lakhs. 10 lakhs.
Don't divide. Cash 10 lakhs. Is it 10 or 20? 20 lakhs, no?
10 lakh, ma'am, for cash.
Cash is 20.
So plant and machinery is 25 lakhs
25.
and cash is
25
20 lakhs, na? If I'm not wrong.
You're right, ma'am.
And what is the value of land that is going out?
10
10
lakh.
lakh.
10 lakhs.
Yeah. But we can see that the debits and credits are not matching. We have a difference. What is the difference we have here?
35 lakh.
5 lakhs.
Now, where will this 35 lakhs go? Where will this 35 lakhs go? That's the question here. It is a profit or loss, first of all. Is it a profit or loss?
It is a
Profit.
profit.
10 lakh asset, you are almost purchasing for 45 lakhs. Agreed?
Yes, ma'am.
Only you are giving only 10 lakhs worth of asset, but in return you got 45 lakhs worth of asset, which means obviously that 35 lakhs is a gain to you. Yes. So this will go to P&L account only in the form of gain. This is clear. Very simple transaction. What are the assets coming in? What are the assets going out? Any difference will either be gain or loss. In this case, it is gain, which is going to your P&L statement.
Ma'am, in this illustration, answer is given. So temporary account are open. So profit on sale of land is given in a illustration solution.
What is given?
To profit on the sale of land, which is balancing here, which is 35 like in that case. In this case,
Which is going to P&L account, no?
ma'am, you taken as a P&L account directly. I'm talking about a temporary account, which are open for that showing the profit on sale of land.
Suppose you write gain on exchange 35 lakhs. Where will this account go? Finally, also P&L statement only, no?
Yes,
so I wrote
ma'am.
directly P&L statement. You can write if you want this way also. Finally, it goes to P&L statement only, no? The main point is it has to.
Stages of that temporary account open it, then accounting purpose one point of view.
Yes. Then
It
you
is
will
also
write.
right, ma'am.
Yeah.
Okay,
It is
ma'am.
also right.
Or directly we taken the ma'am, directly P&L account we credit as the profit.
We can take that also. I think here they have written profit on sale of land, but if you're directly writing it to P&L statement also, it is fine. Anyway, it finally has to go to P&L statement only.
Okay.
Ma'am, in this plant and machinery, we are assuming that it is fair value is given.
Plant and machinery?
Ma'am, in this plant and machinery is valued at 25 lakh. We are assuming that this value is fair value.
It is assumed, obviously when they told that I have valued an asset for 25 lakhs means that is a fair value only, na? Right? When they told that in my books of when they clearly mentioned that the book value is 25 lakhs, it means it is book value. But they told that it is valued at 25 lakhs means it is mostly considered as fair value only. If more details are not given also, we assume this as fair value because it is not clearly mentioned it is book value, no? So you can take it as fair value.
Okay. If a fair value is given, then we did the transaction as per second point, that commercial
Yes,
substance.
we did it according to this point. Yeah.
Ma'am, I want to add it in this point, which is 45 lakh you taken as a total of that, which is the exchange between the land and the plant and machinery in a cash consideration. We also taken that 20 lakh into the 25 lakh as a market or a fair value of that land, right, ma'am?
Yes. If suppose this 25 lakhs was book value, what will you do in that case? If that 25, I'm assuming 25 lakhs is WDV, correct. Then you will move to the third point, which is WDV. WDV here is 10 lakhs, no? So then the cost of the asset will be 10 lakhs.
Yes, ma'am, right. Directly we taken written down value.
Yes. That we will see how it works in the next illustration. Where is this? Look at this, illustration 7. How WDV will work, we'll see.
Ma'am. Entity A exchange car X with a book value of 13 lakh and a fair value of 13 lakh 25,000 for cash of 15,000, and car Y which has a fair value of 13 lakh 10,000. The transaction lacks commercial substance as the company's cash flow are not expected to change as a result of the exchange. It is in the same position as it was before the transaction. What will be the measurement cost of the asset received?
Okay. In this question, they clearly told there is no commercial substance. Yes. So according to the standard, if there is no commercial substance, what will you do? When there is no commercial substance, WDV of the asset of the asset given up or of the asset which is received. WDV of asset given up. Because we will only know what is the asset that is there with us. No. How will we know what is the WDV of the asset that is there with some other person? When you're exchanging, you have an asset, some other person has an asset. You will only know what is the WDV of the asset that you have with you. So mostly we will try to prefer to take the WDV of the asset that is given up, because that is what is existing with us, or that is what is the value we know, correct? So here, fair values are given in this question. That's the greatest part. Fair values of the cars are given to you. If you see the car X also has a fair value, car Y also they have given you the fair value. But can we take the fair value? Can we go in the order that car X ka fair value have to be considered first? If that is not there, car Y ka fair value. If that is also not there, then WDV of car X. Can we take this order in this
No, ma'am.
question? We can't take this. We must have taken this order when if in the question it was mentioned that commercial substance was existing. Since there is no commercial substance, this will not be valid now. So what will be the answer, or how will you take this? WDV should be my valuation, correct? So I will have to take the WDV and then do the remaining part. So let us do the journal entry for this also. What is the asset that is coming in and what is the asset that is going out? There are two assets here. One is car X and the other one is car Y. Correct? So car X is coming in or going out?
Going out.
So
Going out.
it should be credited. Agreed, everyone?
Yes, ma'am.
It is going out, so it should be credited. Now what is coming in? Car Y is
Car
coming
Y.
in. This will be debited. Sure, this is okay. Car X will be debited because it is coming in. Car X is credited because it is going out, and car Y is coming in, so that I have debited. This is the okay, but what is the value? For that, we will have to see. And I think they also mentioned that we also have a cash involved. Can you see that? Can you see that part? Cash
Yes.
of 15,000.
15,000.
So is cash coming in or going out?
Coming in, ma'am.
Agreed, everyone, that cash is also coming along with the car Y,
Yes, ma'am.
which is 15,000. Now, what should be the cost? That is the question. So car X, you will have to take whatever is the WDV. What is the WDV of the car here?
13 lakh.
So 13 lakhs will be the car ka value which will go out. Correct? Now, what is the value of car Y now? Nothing but the balancing figure. Why are we taking the balancing figure? Because this rule cannot change. This part of the rule cannot change, that it should be WDV only. And cash also cannot change because they clearly told 15,000 cash was given. So what will be the balancing figure? The car Y's value will be the balancing figure. Clear?
Yes, ma'am.
What is the balancing figure? Let's quickly calculate.
12 lakh
12 lakh
85,000.
85,000. So car X is coming in and car X is going out and car Y is coming in. Along with that, cash is also coming in. But cash ka value is fixed. Car Y ka value we are determining based on the WDV of car X. It is because there is no commercial substance we did this kind of a journal entry or adjustment.
Ma'am, like we need to justify whether the commercial substance exists or not, right?
That part is not asked in the question because they clearly told there is no commercial substance in this illustration 7 and there is
Ma'am, will they mention in the question whether the commercial substance exists or not, or we have to justify?
No, mostly they will mention because the testing here, they want to test students not about the commercial substance. They want to test how will you treat if there is a commercial substance or how will you treat if there is no commercial substance. That's the main part that they want to test from students, not about knowing if there is a commercial substance or not. So mostly it will be given in the question.
Okay, ma'am. Thank you.
So this part about the exchange, when you are exchanging the assets, maybe for partly cash, it is not. If it is for cash, then it's a different story. But if it is for partly cash and non-cash consideration, you'll have to see two things: if it is having commercial substance or if it is having no commercial substance, and how will you do the treatment. We have done a problem also. Now, those who are asking questions on this commercial substance, why that order and all, are you all clear? I'll just pause. Any questions on this? I will take it up and then I will move. I think one girl was asking about something.
Yes, ma'am.
You're clear?
Ma'am, you can, if there an example more is given for commercial substance, if we can do by by
I
fair
think
value.
in your practical questions, though, on this there are no questions, but I will try to give it as part of your assignment. I'll upload today one assignment wherein I'll try to include these questions. But in practical questions, mostly it is about depreciation and revaluation only. So this part, though, you don't have more questions. I think only examples are there.
Ma'am, because with example, I want to see that WD fair value and WDV of
I'll
commercial
try to
extension.
include it in your assignment. Yeah, I'll upload
Ma'am, it means
assignment.
you said it means you said in exam point of view, illustration 6 is right for that, no? Revaluation of asset, which is we taken as a profit, we transferred to the P&L, right,
Yeah,
ma'am?
yeah.
So
Yes.
this type of exam question is comes, no? In exam
Yeah.
related question.
Exam though you will mostly get such kind of a question, but if you talk about PPE now, mostly they will try to prefer to ask you on depreciation and revaluation only mostly, rather than
This
these
means
simple
types
questions.
of depreciation, which is provision or accumulated depreciation, right,
Yeah,
ma'am?
we still didn't move to that. Main part is that, but still we are here only.
Okay.
But I wanted to take up all those also. Those are like most important: depreciation, revaluation, and depreciation. Today we will have to finish revaluation by any chance, and depreciation I think we'll take it up in the next class. So shall I move on?
Yes, ma'am.
Ma'am, I have a doubt.
Yeah.
In illustration 6 and 7, we are asked to figure out what is the measurement cost of the assets received. So, measurement cost means that what is the value of the asset received? That is the meaning of that.
Yeah, they're asking you to measure the cost. So, what is the value of that asset that you are going to show? The new asset that is coming in, what should be the cost of that asset? That is what is the question that they're trying to ask there. It can't
Oh,
be shown at whatever value that is existing, either fair value or WDV. It has to go in the order which is mentioned in the standard, like this order. So we have for that cost of that PP only, we have done that order ka sequence and
okay, ma'am. So that is the meaning of measurement cost.
measurement. Yes, measurement means how to or what is the value that you have to show. That's what they want to ask.
Okay, ma'am. And we can find it out only by passing journal entries, ma'am.
I mean, it will become easier to understand what asset is coming in, what asset is going out. If not, if you are like good at doing it in a tabular form also you can do, but doing it in a journal entry will clearly tell you what assets are coming in, what assets are going out, any different that goes to P&L account. But you can do it in this tabular kind of format also, na? The cost of the asset is this and all. Anyway, it is fine, but no, doing it in that entry format will be more clear. Yeah.
Yes, ma'am. Yes. Okay, ma'am. Got it.
Now I'm going to talk about the subsequent expenditure. Few people were asking about repairs and all, if you remember. So one condition that is mentioned in the standard is that, is it like a regular and day-to-day repairs and maintenance? In that case, they will go to P&L statement only. It will be an expense and it will directly go to your P&L statement. Okay. But also the standard mentioned that if that expense, if that such kind of an expense, if you incur, will increase the life or the efficiency. Increase either the life or efficiency. These two words are important. Because you are incurring some additional expenditure in the next year that will increase the life of the asset, useful life of the asset, or efficiency of the asset, then you can capitalize it. Okay. Example, let's take an example.
Machinery, ma'am. Machinery we take as example for that.
Sorry.
A machinery for plant and machinery we taken as example for this
Ma'am,
subsequent expenditure.
please request him not to talk while explaining the concept, ma'am. Like it is quite distracting. Ma'am,
Okay,
you
ma'am.
just explain normal, please.
Yeah. Okay. In year one, you have purchased it for a cost of 10 lakhs. Okay. Now you started providing depreciation for 2 years. So at year 3, what is happening? You will have a WDV or the carrying value of 8 lakhs. 2 years depreciation is provided, so you will have 8 lakhs at year 3. At year 3, you had a expenditure that you have to incur. Now that expenditure, if it is a routine expenditure, now the expenditure is like routine expenditure, matlab you just have to do a repair, normal repair and maintenance to that asset. It is costing me 1 lakh. What will you do with this 1 lakh? This will go to P&L statement. Okay. Now, if I have to incur an expenditure, it's like a major expenditure, which is like completely replacing a particular part. Okay, I have to, there is a machinery and I have to replace that part completely. Only then I can use that machinery, or that replacement is such a huge expenditure that once I replace this part, what will happen? The machine will run for more number of years. Now, what is the life of the asset? Let us assume the life is 10 years. Okay. Already 2 years are done. So there are 8 more years. Now I have to incur some 1 lakh expenditure. With this 1 lakh expenditure, what will happen? My life will be 12 years now. After I incur this major replacement of a particular part, my life of the asset is 12 years, or the efficiency will increase. Before, I used to only give 10 lakh units. That machine used to produce only 10 lakh units. Now, since I have replaced that particular part, or since I made a little expenditure to that machinery, it will give me 12 lakh units now. So this is increasing your efficiency, or this is increasing the life of the asset. In that case, what will happen? This expense have to be added to the cost of the asset. So what will be the cost now? 9 lakhs will be the cost, and you will start depreciating from there for 12 more years again later. Right? So should you add this 1 lakh to the cost of the asset and continue depreciation from there or not will depend upon if that expense is increasing the life or efficiency of your asset. If it is a routine expenditure or a general repair which is regularly done every year, then it should be taken to P&L statement. This 1 lakh will go to P&L statement because it is a general repair. But major replacement will be going to your cost of the asset. This is clear?
Yes, ma'am.
Now I will talk about this major replacement and major inspection, major overhaul. What happens? This is specifically brought in for aircraft or ships majorly. In these two cases, what happens is major overhauling expenses or major inspection charges will be very high. Now, if the aircraft is costing you some 10 lakhs, the major repairs or major replacements or overhaul expenditure is nothing but the major cleaning that happens for the ships, or the major what we call repairs that happen, or this reassembling that has to be done. All these will be categorized overhaul expenditure. So those will be like major expenditures, which means if the cost of the asset is 10 lakhs, their major replacements only will cost you some 2 lakhs, 5 lakhs also sometimes, or even 9 lakhs, 10 lakhs, almost equal to the cost of your asset also sometimes, right? Major replacement. These mostly will happen in case of the aircraft and ships, like I told you, because the cost of the asset is one kind. Also, the replacements and major overhaul or inspection charges that happen are also a part of the asset only. So in that case, what will happen? You will capitalize all those major replacements or overhaul. Like I told you, if a aircraft was purchased today, now this was some 20 lakhs. After 5 years, what happened? You had a major overhaul expenditure of 5 lakhs. Okay, so you will start adding this also to the cost of the asset. That is what it means. You are adding it because it is a major overhaul or a major replacement cost. It has to be added to the cost of the asset because this will create a good efficiency to your asset, or it will increase the efficiency or life of your asset. That is why it is added to the cost of the asset. Now, how that is done is this way. There is now this is how you do. You will take the WTV of the asset, like we have taken example. 20 lakhs is the cost of the asset. After 5 years, what will be the, let us assume useful life is 20 years. So which means depreciation is 1 lakh. After 5 years, the depreciation will be 5 lakhs. So you're having a WDV of 15 lakhs or carrying value of 15 lakhs. This is the WDV of your asset. Right? Now, I have to replace a major part or major overhaul and all these things. Major replacement is done, right? So what will happen now? That part, now this is a particular aircraft. This part is replaced. This part originally it was costing me 1 lakh. Okay. Now to replace this, it will cost me 2 lakhs. That is what they have given in the question. So what you will do, you will add this 2 lakhs, which is a new cost, and you will remove that 1 lakh, which was the older one. So what is the final revised cost that we have? 16 lakhs. Now you will start depreciating this value for the remaining useful life. That's how it works. You'll have to see if it is, old and new parts that are replaced when you know the values and all, this way you will have to do it. But if it is a charges or an expenditure that you are incurring and all major overhaul, you will directly add it to the cost of the asset. Clear?
Ma'am, we taken as a for a depreciation calculation year on year. From this 16 lakh, we taken as a from we taken added cost of new plant and we reduce the old written down value of the plant. Right, ma'am? We got the 16 lakh. For the calculation of that, we divide into the for remaining years, no, ma'am. Remaining years are in this case, which is 15 years, right, ma'am?
Yes,
So
yes.
we divide and after further showing the accumulated depreciation, we year on year we deduct from the dividation value, which is the 1.5 lakh per year, right, ma'am? For that
Yes,
16
that's
lakh.
it. Once it is added to the cost of the asset, from there you start depreciating normally.
Okay. In this manner, na, which you said, which
Yeah.
you determine. Okay,
Yes.
ma'am.
So now you have 16 lakhs as your value. Then already we have depreciated for 5 years. So you will depreciate 16 lakhs for 15 years more.
Yes, ma'am, understood.
Okay. Now look at this question. Very small question. It talks about, how the replacement and all that will work. What happens if the cost of the previous part or inspection was not identified? Which means, actually, I told you that old part ka value have to be removed and new part ka value have to be added. This is what I told you for the WDV to arrive at the new WDV. Now, what if this value is not available? They're saying if you cannot identify this value, what will you do is what they're asking. Right? What can we do in this case? In that case, can we ignore it? If you are not able to identify whatever is the cost of the previous part that is there or acquired, what will you do in that case? Can we not deduct this is what they're asking. Can we ignore this part? No, we can't do that because the standard says the part of the cost of the old part have to be removed. So you will find a similar kind of an asset. You will find a similar kind of an asset, or you will try to see. You will have to finally you will have to remove the value of that old part. How will you remove? If you have the cost identified, you will remove it. If not, what will you do? You will try to see a similar kind of an asset that is available. If such a similar kind of an asset is available, then you will take the value of that and remove it. Okay, in this case, they're still asking you the same question. If it is not practicable for any enterprise to determine the carrying amount of the replaced part of all such thing, like I told you, you will have to use the similar kind of, say if suppose there is a similar machinery or a similar aircraft, for that particular thing, what are you doing? For a similar kind of a situation, how are you implementing the cost? You will take that and then do this calculation of old and new part removal and calculating the new WD. Right?
Ma'am, in this new plant, you write here new plant. We taken as a cost value of that plant, not a
Yes.
written down value of that new plant. Only for a old plant we taken as a
New
written
ka,
down
how
value.
will you get WDV? New ka, no WDV, na? Old part ka only you will have the value. Cost.
Not from written down value, no?
Huh. You're talking about cost, new or old. See, old ka you will never have cost. New ka you will never have WDV, no? But new, how will you have WDV? Because it is just purchased. It is cost only. Old car, you will have WDV only, no? Because it was purchased 5 years or 10 years back. You know what is the cost, and then you must have depreciated for it, depreciated this for years. So then you will know what is the WDV for this.
Ma'am, in red pen you write here, no ma'am.
So, ma'am,
I have written. Can you see?
Uh, previous slide of that, which you have written on that.
No, that I removed. I keep
Study mat, ma'am.
discarding.
Study mat, study mat, study
This
mat.
one. Ah,
5.4 page number.
yeah.
हाँ.
Hmm.
Here you written the ma'am in above plus new part written down value and then new written down value ma'am you written as a plus of
Hmm.
new part.
Hmm.
So ma'am, this
Once
is
you
new written
calculate
down.
this will be called new WDV only, no?
Okay ma'am. Just I am confusing. It is after the
No,
calculation.
I'm telling you the final balance. Revised WDV or the new WDV. This is the final balance.
Okay ma'am. Okay, understood.
Okay.
Clear, ma'am.
ma'am, in illustration 8, if we could not able to identify, then we will take all WDV only.
Yeah. Whatever is the, you will have to de-recognize whatever is the carrying value. I mean, whether the cost of the, if you are able to identify, they're saying you're not able to identify the cost. So can you ignore this part is what they're asking. You can't ignore. In this eighth question, they're asking whether can you ignore or can you, remove this old part ka thing is what they're asking, but you can't do that. You have to remove the cost of previous part and then add the WDV of the old one should be removed and cost of the new one should be added for sure. If you're not able to identify, then what will you do? The next step is asked in the next question. What will you do if it is not practicable? Then you will see for the similar kind of a cost or similar kind of an assets which will give you the cost. In this question, they're asking if you'll do or not. Yes, we have to do. But in this question, you're asking how will you do? When it is not practicable, how will you do? We will find for similar.
Okay.
So we have discussed this subsequent expenditure ka. So I told you in subsequent expenditure, whether it is, you have to see whether it is a regular expenditure or expenditure that is increasing the life of your asset or efficiency of the asset. If it is increasing the life or efficiency of your asset, yes, you will have to capitalize it. If not, you will take it to the P&L statement. And also the major replacement, overhaul expenditure and all have to be also capitalized. This we have seen in the subsequent expenditure, right? Now, if you remember, I told you after recognition, you can change it to cost model or revaluation model. This we have seen before, right? So initially when you're recognizing, we will show it at cost, whatever is the cost. And what is included in cost? We have seen purchase price, rebates, all that we have seen. I'm not going back there again. Now, after recognition, which means after 1 year, after 1 year, you can change to revaluation model. So what will happen in this revaluation? Cost anyway, cost model means what will happen? Cost model means what will happen? You will have a cost of the asset. You will remove any depreciations for all the years. That will give you the carrying value. I'm not talking about impairment losses since we didn't discuss about it. This will be there in your impairment standard. You will then understand what is an impairment loss and all. This will give you carrying amount. It will go on if it is a cost model. But when we are talking about revaluation model, what will happen is you'll have to check for what is the fair value on the date of revaluation. So what is the fair value on the, why are we generally following this revaluation model is, now, I have purchased machine A, okay? I've purchased it for 10 lakhs. After 2 years, I see that this machine is worth 15 lakhs in the market. Okay, this machine is worth 15 lakhs in the market. Now if you don't show that additional 5 lakhs or whatever value, what will happen? Your balance sheet is not showing a true picture because your asset is showing more worth, the value is more but you are not showing that value, then your balance sheet is not showing a true picture. That is why generally people try to follow revaluation model. This can be the opposite way also. You purchased it for 10 lakhs. Now if you, after 5 years, you see that in the market the asset doesn't have that value. It is just 1 lakh in the market. So that difference you will have to show it as a loss. When you are having a loss or a gain, both have to be shown in your books. books of accounts as a revaluation gain or revaluation loss. Right? That is where revaluation model is mostly brought in to have that, true picture in your balance sheet. People try to follow revaluation model, but most of them also follow cost model, wherein I stick on to whatever is the cost of the asset. I purchased it today. Till the asset is sold or disposed of, I will continue to show only cost. Some people do that, but some people prefer to shift to revaluation model after few years. It is because of the value that is existing in the market, the fair value at any reporting date, right? So again, for this fair value, you will remove the accumulated depreciation and impairment losses, if any, carrying value. This is how it comes in. Anyway, the value should be taken, accumulated depreciation and impairment losses all have to be taken to calculate the carrying value. But are you taking the fair value or the cost is what matters. When will you take cost minus accumulated depreciation when it is cost model? When will you take fair value minus depreciation when it is revaluation, right?
Ma'am, in
Now, the
practical way,
frequency of revaluations, when how many times you will do this revaluation? Should you do it every year or will you have to reevaluate once in a while? Generally, what standard is, if the PP, I mean, whatever asset, it has some volatile changes, which means the asset is such an asset that, the value in the market changes very frequently. If you look at these shares and all these things, they're like very volatile. They keep changing every day also, right? I mean, I just gave you an example. So such kind of an assets, what do? You do annual reevaluation. Every year, you will have to check for what is the fair value in the market and see if you have revaluation gain or revaluation loss. This will be done for assets which are very volatile. Volatile means they keep the value of that asset changes very frequently. But if such asset is not such kind of an asset which is volatile, then you can revalue for every 3 to 5 years. It is not needed that you revalue every year. You can revalue once in a while, maybe for 3 to 5 years once. If it is a volatile asset, you have to revalue every year. Annual revaluation have to be done. Right? And when we are talking about revaluation, one more thing you will have to remember. Revaluation, if you're doing, you will have to do it for entire class of PPE. Entire class of PPE means what? Generally, PPEs are divided into different classes, right? Like, building, then you have furniture, then you have machinery. So these are like different classes, we say. Now in buildings, you can have 10 buildings. In furniture, again, you can have 20 furnitures. In machineries, you can have hundreds of machineries in one machinery, two, and so on. So when you're doing revaluation, you will have to do it for the entire class, which means you want to revalue building, you will have to revalue all the buildings, all the 10 buildings existing in your business. If you want to revalue furniture, all the 20 furnitures have to be revalued. So this is a very important point, wherein entire class of PP have to be revalued. There is no option of revaluing only one building. If you feel that the asset have to be revalued, the entire class of PP have to be revalued. You don't have to revalue all PP. When I want to revalue some building, it is not needed that you revalue building, furniture, machinery, plant, everything. Not needed. That class of PP, if you revalue, it is enough. The standard is telling you that you have to revalue entire class of PP have to be revalued. Right?
ma'am, can you give example for annual revaluation?
I gave already. Like I told you, any asset which is volatile, you keep revaluing every year. Volatile matlab any asset that is very frequently changing its value. Now you take any building, that building is in a very prime location. The value of building changes you can't say every year, it can change very frequently, but you will revalue it annually. Right?
Okay, ma'am.
So this revaluation model is mostly followed, depending upon the assets volatility and assets changes it can have. If the asset is changing very frequently, the value, or if it is not changing insignificantly, then accordingly you will try to revalue. How to record for revaluation gain and all that we will see accounting treatment. But you understood what is the difference between a cost model and revaluation model?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay. This is about increase and decrease. If you look at this, this will be like some Greek and Latin to you. Just take 1 minute and read this. So here they're talking about if there is an increase in revaluation or decrease in revaluation, how will you record for it, right? This I will take it through an example so that it will be more clear to you. Now, revaluation, there are two types of accounting treatments, right? Two ways you can do the accounting treatment, the revaluation. One method is very simpler method. The other one is like little, no, it's not like not easier one, but then mostly people try to follow this method. I'll tell you. Example. Cost of an asset is 1 lakh. Okay. And you have an accumulated, we are talking about accumulated depreciation and all depreciations, how to calculate and all. I'm assuming most of you know what is a depreciation, but still we have depreciation part in the standard coming up. So don't worry if someone doesn't know how to calculate depreciation or someone doesn't know what is an accumulated depreciation, all these things, don't worry about it. Just for now, go with the flow. Depreciation, so we have a separate topic in the same standard, PP only. We'll do that. Okay. This is clear. I have purchased this particular asset for 1 lakh. I provided depreciation, accumulated depreciation for 20,000, and the carrying value right now I have is 80,000. Okay. This is after. This was in year 1. This is for 2 years. So year 3, I have a carrying value of 80,000. This is okay. Now year 3, what happened? I want to revalue my asset. I feel that the asset is not worth 80,000. It is more than this. So I wanted to revalue. I have revalued this asset. Okay. Let us assume I have revalued it to 1,20,000. So what is the revaluation gain here? Gain or loss? Is it a gain or loss?
Gain, ma'am.
How much is the gain?
30,000.
40, no?
80,000 carrying a value minus 120. 40,000, ma'am. Sorry.
Yes. So now the revaluation gain I have here is 40,000. This is okay. Now, the treatment, what we have to do is what is the question, right? How do you record for or how do you account for? Revaluation gain means what? The value of the asset is increasing, right? The asset value is increasing. Previously, it is costing how much? 80,000 only in my books of accounts. But now I will have to show how much? 1,20,000 in the books of accounts. So the asset, whatever is the asset or PPE that we have to be debited. Agreed? It will have to be debited by 40,000. I will have to increase the value of my asset by 40,000. Is this clear, everyone?
Yes, ma'am. Clear.
Right. Now, to gain on revaluation, 40,000. This is the journal entry that we write. We are increasing the value of the asset by 40,000 and that gain is going to gain on revaluation account, right? This account will go to your owner's capital. Owner's capital, whatever we will have different reserves and surplus written in the owner's capital. Along with the capital, you will have different kinds of reserves. So this will be sitting there in as part of your owner's capital. Okay. So your gain on revaluation is going to your capital account. We can say owner's capital account. That is one thing, right? So you increased the value of the asset and you have returned a gain on revaluation. Now, if it is the opposite, what will happen? If you have a loss, then what will happen?
It is credited.
Loss on revaluation is debited to asset. Asset value has to come down by 40%.
Assets are credited.
Right? This is increase or decrease. It depends on that. But now we are not worried about loss because this question it is anyway gain. Right? This is one thing. Now, the first accounting, there are so many questions. Okay. Now, the first accounting treatment is what you know. In this accounting treatment, what we try to do is we will eliminate accumulated depreciation. We will eliminate accumulated depreciation, which means what will happen is whatever is the value that is existing in your books of accounts, the depreciation ka value is eliminated and the remaining value is compared with your revalued amount. That is what we have done now. What did we compare? 1 lakh cost and revaluation amount of 1,20,000. Did we do this in this question? Are you all there with me? Please respond. Did we compare 1 lakh cost and revalued amount of 1,20,000 to see whether it is gain or loss?
Yes, ma'am.
Did we do this?
No, ma'am.
What did we do then? We have compared carrying value. No?
WDB.
Yes, WDV. WDV or carrying value, both are same, right? Carrying value means what? The value that is existing at the year-end date. Whatever is the year-end date, it is year 3 here. It might be year 4 or year 5, whatever it is, at the year-end date, what is your value existing in the books of accounts? Now, I compared my carrying value with the revalued amount to see whether it is a revaluation gain or not. That is what we have to do. Now, first accounting treatment, it says that cost and revalued amount cannot be compared. These two cannot be compared, right? So what will you compare? You will only compare the carrying value and the revalued amount. If these two are compared, whatever difference you have will be either gain or loss. It depends. When these two are compared only, we will know whether it is a revaluation gain or loss. This is the first accounting treatment, right? So for doing this, what is that adjustment you will have to do is, you will first have to eliminate your accumulated depreciation. Accumulated depreciation account is a credit balance account. We all know that.
Yes, ma'am.
Right? Now, when you are following this method, what is happening? Cost is there in your cost asset account and accumulated depreciation is there in your accumulated depreciation account. First, we will have to cancel that. How will you cancel? You will cancel the accumulated depreciation account by debiting it and you will decrease your PPE so that the value will come down, correct? What is the value? 20,000. Why did I post this entry? Are you all clear? After
Yes,
posting this entry, what will happen? My PPE account will be how much now? Initially, the cost was 1 lakh. It was carrying 1 lakh. And accumulated depreciation had how much balance? 20,000. Yes? Yes or no? When I post this journal entry, what will happen? This 20,000 value is reduced. So finally, the balance I have is only 80,000. So this can be compared with my revalued amount to see whether it is gain or loss. You understood why I posted this journal entry, accumulated depreciation account to PPE account, so that this accumulated depreciation account will become nil. This is no more there. This is no more there. And your balance in your PPE is 80,000, which is compared to your revalued amount to see whether gain or loss. And after that, now what is the value? 1,20,000. Yes. Now the value is how much? 1,20,000. So I will add 40,000 to this. Now what is the value I have in my PP account? 1,20,000. Then I will start depreciating from here. Again, every year I will start depreciating for 1,20,000. So this accounting treatment says you eliminate the accumulated depreciation account till whatever accumulated depreciation account, balance you have, eliminate that first to see what is the carrying value in your books of accounts, then compare it with the revalued amount. Am I clear with this?
Yes, ma'am.
Sure?
Yes, ma'am. Sure.
Okay. This is the first accounting treatment wherein cost is there, accumulated depreciation is there, both are compared, or one journal entry is posted to eliminate the accumulated depreciation and reduce the PV balance, and carrying amount is compared to the revalue amount. It's very simple to do it also. Okay? The calculation is also very simple, right? And then once you have a gain or loss, you will post this journal entry. So there are two journal entries that will be posted. One is this and one is this. This is the first accounting treatment. Now let us see the second accounting treatment. Second way of doing it. In this, what happens is a revaluation factor have to be calculated. Here, in this method is generally not by eliminating accumulated depreciation. We don't eliminate any depreciation. You will have to just adjust your figures. You will have to adjust your cost figure, and you will have to adjust your accumulated depreciation figure to see what is before and what is after revaluation by using a revaluation factor. Okay, revaluation factor. Okay. Now let us take an example. The time. I'll close with this example. Just give me 5 more minutes because this is in between. I don't want to stop. Let us finish this accounting treatment too also. Okay. So in this example, cost is 1 lakh and accumulated depreciation is 40,000. So I have 60,000 as my carrying amount. Okay. Is it a revaluation gain or loss?
Revaluation loss, ma'am.
Is it revaluation gain or loss? Think
90,000, ma'am. Revalued amount is 90,000.
This is 90. Yes.
Okay, ma'am. It become a gain.
Everyone agrees to it?
Yes, ma'am. 30,000 is gain on that.
Okay. This is very simple. I have purchased it for 1 lakh. Till now, I provided 40,000 depreciation. So my carrying amount is 60,000. Today, I am revaluing it to 90,000. So I have a gain of 30,000. This is very clear, correct? Okay. Now, I told that we have to post this journal entry to eliminate the accumulated depreciation and all these things, right? So this will not happen in this accounting treatment. In this accounting treatment, what will happen is you will try to inflate your values. You will try to inflate your values here to make it a gain and show it in your books of accounts. How that is done is revaluation factor, I told you, right? So revaluation factor ka formula is, you can note this down because this is not there in your study text. This is something I'm trying to teach you so that it will become easier for you rather than doing it that way. So look, if you want, you can note this down. So what is the factor? Revaluation factor formula: revalued amount divided by carrying amount. Do you know these two values now?
Yes, ma'am.
So what is the revaluation factor here? Revalued amount is 90,000 and
90,000.
carrying amount is
60,000.
what is the revaluation factor?
1.5, ma'am.
This is okay. Now see what I'm going to do here. Now multiply this number with this factor. 1 lakh into 1.5. What is the value? 1 lakh into, are you all there?
1,50,000.
1,50,000, okay. And then 40,000 into 1.5?
60,000.
60,000, okay. And then?
120.
Huh? 60,000 into 1.5?
120.
90,000. 90,000. 60 into 60,000 into 1.5 is 90,000.
This is okay. What did I do here? What did I do here? Just to clearly look at this table. Only this table. Look at this table. What did I do? I didn't do anything. This was before my revaluation, this part. This part was before my revaluation, wherein I had a cost of 1 lakh. My depreciation was 40,000 and I had a carrying amount of 60,000. This was there with me before my revaluation. Now there is a revaluation that happened. I don't want to eliminate all these values. So what I'm doing is I'm applying a revaluation factor and changing my cost and depreciation values. If you see, what is the cost now? 1,50,000 and depreciation is 60,000 and carrying amount is how much? 90,000. Is this the revalued amount?
Yes, ma'am.
I have to show revalued amount in my books of accounts by the end of this revaluation. Do I have that revalued amount in my books of accounts right now?
Yes, ma'am.
So this method may what we are trying to do is we are not trying to eliminate depreciation completely, or we are not trying to eliminate cost, whatever it is. You are trying to inflate the cost and depreciations and then bring the revalued amount. Whatever is the revalued amount, this should be finally there in my books of accounts, 90,000. I am bringing this, but how did I bring this? By inflating my cost and depreciation, but not by eliminating my depreciation or cost account. This is clear.
Yes,
Mostly
ma'am.
people doesn't follow this method because inflating cost, inflating depreciation is not so practicable also. So people don't follow this method. The first method is only mostly preferred, wherein we try to decrease the value of the asset, eliminate depreciation till date, see what is the gain or loss, and then continue from there. But this method is like a different method, which is there, so you have to know about it. But practically, mostly the first method is only followed.
Ma'am, in exam point of view, both method are used.
Yes, better you know both of them. Yes, both the methods should be. Yes.
Okay, ma'am.
Okay. What will be the journal entry for this? Let us also write that. How much should I increase my PPE by? 50,000. Are you all there?
Yes, ma'am.
And my accumulated depreciation have to be increased by how much? 20,000.
40.
20, no. 1 lakh to 1,50,000, how much should I increase? 50. 40 to 60, how much should I increase? 20, no?
20.
Yes. So what is the
How we
revaluation
got
gain?
the value
Huh?
50 and 20?
Difference between these two. What was my cost before? 1 lakh. Now what is the cost? 150, no? After revaluation. And what was my depreciation before? 40,000. And what is the depreciation after revaluation? 60. I have to increase the values. Now I told you we are inflating. From 1 lakh, you need to show 150. From 40, you need to show 60. So I'm increasing the asset cost by 50 and accumulated depreciation by 20. Okay.
Yes, ma'am.
Now, what is the difference? And where do we have difference? On the debit side or credit side?
The
On credit side, 30,000.
So is it a gain or loss?
Gain, ma'am.
It is a gain.
Gain on revaluation. How much it is?
30,000.
Is it matching here? Is it matching to our
30,000.
example?
Yes, ma'am.
Understood how we did it? The final gain or final amount of carrying amount 90,000 will remain same, but how are you doing it is only what is the difference. The treatment how you do is the difference. Are you inflating the asset and depreciation values, or are you eliminating them and trying to find out the gain? That's the only difference.
Ma'am, in answer, I do as a just post to this tabular method, or I also do a journal entry for that.
If they're asking you that specific method, then you will do that specific method only. If not, you follow whatever. If nothing is asked in the question, then you do whatever is easier for you.
चलेगा ना मैम? अगर नहीं दिया
If
होगा
it is
क्वेश्चन.
not mentioned, no method is mentioned, you can follow any method, no problem.
Okay, ma'am.
I think you can take the screenshot because this is not there in your study text. This
Ma'am,
is a
give
little...
screenshot of accounting treatment one also.
This is done. Then I'll move.
Yes, ma'am.
Okay. Take this also. It was a little different way. In your textbook also it is the same, but the way they have done is a little different. Done?
Yes, ma'am.
Okay. I'm going to the textbook ones. Now what you all will do is, can you see this? Can you see your study text?
Yes, ma'am.
Yes.
So this is technique 1 and this is technique 2 that they have done with a different example, but the final conclusion is the same. Okay, I want you to try this example. If you are able to do this, then I think you are good. You understood the example. Okay, try these 2 different cases of how to do the accounting treatment. Are we clear?
Yes, ma'am.
Yes or no? Please respond. But revaluation increase or decrease, this also, I thought of finishing this also, but I couldn't do. Okay, fine, I'll do it. I'm giving you one more homework. Look at the objective questions once. And also, you can finish 12th one. Can you see the 12th one? 12th question here, scenario-based questions. This is a very simple question. You just have to determine which item goes under which head. Is it a purchase price? Or is it a cost, directly attributable cost? Or is it a cost not included? Is it an exclusion or inclusion? That breakup you have to do for all these items. It is simple. We have done about the cost, no? So I want you to try this question and also the 13th question. Did we do this similar kind of a question? Of which costs have to be added, which have to be eliminated?
Yes,
so this also you can try. I want you to try 12th and 13th one. These 2 will be your homework for today. And also these 2 cases. The revaluation ka 2 different cases what I talked about. Those 2 also you have to finish. Am I clear?
12th, 13th, ma'am.
These 2
And also
cases
what?
and those 2. Yeah.
12th and 30th and also what, ma'am?
These 2. The technique 1 and 2, whatever I have taught you. In your study text, you have a different example. So try that.
Okay, ma'am. Okay.
Okay.
Ma'am, give me that screenshot again, ma'am.
Which one?
A
Solution.
screenshot. Yes, ma'am. Example particle.
Yeah.
Ma'am, I want to ask you explain the exclusion.
1 minute. Yeah. 1 minute. Is it done?
Okay.
Yes, ma'am. Second part.
Please take it fast. So.
Done, ma'am.
Ma'am, in page number 5.33.
1 minute. So I'm any other questions except I think who wanted to ask? Who's talking? I think you wanted to ask about decommissioning, right? Other than that, if anyone has questions, you want to stay back, you can stay back. Otherwise, you can leave. You can continue. You can leave the session. Those who have doubts and wanted to clarify something, you can stay back. Otherwise, you can leave for the day.
Ma'am, in previous chapter, hello, ma'am.
Yeah, tell me.
Ma'am, in previous chapter, the page number is 5.17. There's a TYK 7. You told that there is a concept at
There is a concept?
At cost, replacement cost, this concept, ma'am. I can't understand. Please, once again, can you repeat?
Which one? I didn't get your question only.
Ma'am, in previous chapter, TYK 7, raw material at cost.
Inventory, you're talking about inventories chapter.
Yes, ma'am.
Okay.
Yes, ma'am.
In inventories chapter, what happened?
Raw material at cost, when at cost, if the finished goods are sold at above cost. This concept.
That entire concept you want me to teach again?
Yes, ma'am. Yes.
But I think now though I can't do it because I have other session also to take up. It will take time. Maybe in the next class. Okay, remind me in the next class.
Okay, ma'am.
Because that will take some time, and I have one more session now to take up. So I think Lohit was asking about decommissioning. If I'm not wrong.
I am asking, ma'am.
Okay. So you decommissioning, I think you missed that part. Decommissioning is nothing but wherein you will have to restore. I told you if you have taken an oil rig or you have taken a quarry for doing that mining or all these things, such kind of an assets, what happens is you will have to restore them back, which means that oil rig, whatever you have taken, you try to dig oil. And once the contract is done for 10 years or 20 years, you will have to restore that particular place into whatever it was earlier and give it back to the government. Or if it was a machinery, then you do the dismantling, right? The machinery have to be dismantled from that location, and then only you can restore it into the same position. You have to make that area into the same area how you have taken it before, and then give it back to them. So such kind of a costs are called decommissioning, dismantling, or restoring costs, which will be incurred when they will be incurred after 10 years or 20 years, not right now. That cost is not incurred right now. When will you incur in future, right? But that future cost, we are trying to include it into our cost right now. It is because in future you expect some cost to come because of being prudence concept. You try to include it now itself into your cost so that you depreciate it every year.
Hence we added it, ma'am, in the cost of PP.
Into the cost of the asset, yes.
And ma'am, in this point, note is there for that. Point number C, decommission. I understood the decommission and restoration. Now in that a note is given, ma'am. So here is accordance measured in accordance with AS 29, which is revised provision contingent liability. And ma'am, please explain this note only.
The obligations for cost accounted for in accordance with AS2 or AS10 are recognized and measured in accordance with 20. And this means you have to also know what is the standard 29, which talks about the contingent asset, contingent liabilities and all, right? Now, like I told you, this is an obligation that will come in future, na? Not now, correct?
Yes, ma'am, correct.
That future obligation, whether you have to record or not, that is a contingent liability, contingent asset concept. This standard, I think, is not done for you yet. It is a liability standard. So when you're talking about contingent asset and liability, that will tell you whether it should be included or not, whether it should be adjusted or not. All those things are there in that standard. Okay. So here they're telling you this cost, it will also have to be measured according to that standard. How do you value it? They will tell you that you will have to, record it at by discounting the value. It is in future, no? It is after 10 years. So you have to discount that value. So how will you measure and all is told in that standard. So you have to follow that method is what they're saying.
Can I
We
refer,
can
ma'am?
again in
Just
that
refer
standard.
for the solving the TYQs of inventories and
No,
PP.
no. This will not affect. Don't worry about it.
Okay, for measurement and recognition of that
It
AS2
will
and
not
AS.
affect. This will be coming up in that standard AS29.
Okay, ma'am. Oh, thank you, ma'am. Understood.
Technical team, can we close? Thank you.